You can do a little pan around. Yeah.
Loosen a little bit, a bit tight, stutter on it. Yeah, they just, there you go.
Oh yeah, good action.
Oh. Is this the first time we've done this conference?
No, I done one last year. I think.
Was it even last year?
Yeah.
That's a piece of cake, so.
Keep it safe, lads. Keep it safe.
The boys obviously planning on talking dirty for the next 8 hours.
Get a close up of them now. They're obviously dodgy now. They're moving out of the way.
Hello everybody and welcome to Bitcoin Ireland 2023. Thanks for coming down, and we're going to have a great day today. Whole day of speakers, with Greg Foss zooming in later on. And so we're going to start it off, we're going to kick it off with Bitcoin Basics with Dinny Collins. He's going to be talking about just the basics and about Bitcoin pensions. And then we're going to go into, at 11 o'clock, we're going to go into Why Bitcoin Matters with Con Stevenson. He's going to give a nice presentation there. And then at 12 o'clock, we're going to get Greg Foss zooming in from Miami. And they're all over there at Bitcoin 2023. He's going to be talking about the banking crisis and what's happening. You know, there's big things coming, big changes coming. So people need to really be aware. If we knew what was going to happen in 2008, back in 2007, we would be a lot more prepared. And then we're going to break between 1 and 2 for lunch and networking outside. It's going to be a nice lunch out there. Back in at 2 o'clock with Digitality as Resistance with Simon Johnson and Chris McLaughlin. That's going to be a good talk as well. And then at 3 o'clock, we're going to be talking about Bitcoin and the global economy with Richard O'Hagan and Charlie Stevens. And at 5 o'clock, it's going to be running a Bitcoin company from Ireland with Jamie McCormick. And then we have, after that, Bridge to Bitcoin. They help companies adopt Bitcoin and take Bitcoin, and they're fairly big over in the UK. They're going to be telling us Irish businesses and some UK businesses here as well how they can start accepting Bitcoin as payments. And then there's a little bit of a surprise after that. And then last but not least, I'm going to be doing a panel here with John McGill, who's our main sponsor here from Zacharias. He's going to be talking with Chris Gordon and Jamie McCormick. We're going to be talking about the new digital euro, CBDCs, privacy and data. And then after that, I'm going to go and have a few pints of Guinness and have a few drinks and enjoy ourselves for the night. So, good, nice roundup of speakers for the day. And let me introduce the first speaker for Dinny Collins. Come on, Dinny. Are you ready? Let's go.
Thanks, Lawrence. We gave you name tags today just to try and break the ice. So don't be shy. During the breaks or whatever, you know where yous are from, you know what yous are called. Everyone's here to network and have the crack. And if it's your first time at a conference or you came, on your own, just get out there and push the boundaries and have the crack with people. As Lauren said, we've got a great day of amazing speakers, and unfortunately you just have to endure me for a short while, and then we get into the good stuff, the good lads, the big brains. But just wondering, who here is involved in Bitcoin maybe 5 years or more? Awesome. 4 years. 3. 3 or less. 2. 1 year. Okay, deadly. So we have some beginners. I do the beginners. I do the simple stuff. The mega brains can do the big stuff. I just want to say thanks to John from Zapright for coming on board as our sponsor, and it would be awesome to give them a bit of support. Zapright is a suite of merchant tools that allows anyone to easily start accepting Bitcoin payments using hosted checkouts. The platform allows users to connect self-custody and third-party payment rails, and to configure branded and hosted invoices and payment links. The sign-up process is simple. It's easy. I've done it myself. Just go onto the website, zapright.com, and only an email address is required, and that allows you to quickly onboard and start accepting Bitcoin for on-chain and over Lightning. So, you know, at some stage today, check out their Twitter @Zapright app and check out their website and give them a bit of support as they've supported us and helped get the event going. Happy days. Now, 1 second. Lovely. So I'll be covering sort of the basics. I suppose everything I do in my life has been about the basics, and I think the basics of Anton are really important, and you can never sort of not revisit them enough. And I want to talk to you a little bit about Bitcoin pensions, because that's sort of what I do in my office in Swords. Just a quick little bit about myself. I'm owner of Bitcoin With Dinny. Previously, I was crypto with Dinny. I changed my ways. The Maxis will appreciate that. In the office in Swords, we've helped not quite 1,000 people yet, but we're into hundreds in consulting, and we've helped them build their own personal Bitcoin pension plans. My background before that was in health and fitness. Through that, I've had a lot of companies in that. I've helped tens of thousands of people to improve their health. My background story, just in 30 seconds, is how I ended up in fitness, and down that rabbit hole of money and Bitcoin and investing and all that was seeing my family struggle for money. My parents, both of them worked, but we never had enough money. Money was always an issue. And that was my motivation to get rich, just so I could solve my parents' problem. Just so Dad could drive into Mass in a nice car instead of a banger. And it's funny, like, you know, when you're a kid, but they're the things that motivate you and spark you and that drive you forward. And so I started my journey. I just showed a picture of the caravan to show that I wasn't privileged. It didn't, you know, I wasn't lucky. It was just sort of proof of work, hard work. And back when I was in that caravan, I was after breaking my back. I had a broken spine, I had no money in my bank, and started my journey to entrepreneurship and sort of taking responsibility. Went on to build fitness companies and exited them, and still have a nutrition company and the Bitcoin consulting company. Everything I do is sort of what I'm passionate about. Because I solved my broken back, well, I didn't solve it, but after a couple of surgeries, things weren't working, so I had to go and help the process. I was blaming the surgeons. I was just like, fix me. Didn't want to take responsibility. And then when I took responsibility, I had to go and become a physical therapist and a fitness trainer to understand the body, just to try and solve my own problems. And that's sort of what got me here today. But I was insanely passionate about fitness and health, which I still am, and I'm insanely passionate about Bitcoin. I'm sort of in a fortunate position that I always try and link my work into things I'm passionate about, and it allows me to sort of high energy and have a bit of crack with things. Hands up here who thinks inflation is less than 5%? Less than 10%? Come on, the official figure said it is. Alright, so the smart people here. Hands up here who thinks inflation is around 15%. Raise your hands, please. Does anyone in this room, and inflation is subjective, okay, because it depends what you want to buy. Does anyone think inflation is running more than 20%? Is anyone suffering from 20% inflation? Eek. What about 25%? Okay, we'll leave it at that. I suppose traditionally our pensions, if you just Google what's the average return for a pension in Ireland, it's somewhere around 6%. You know, and just with rational thinking and first principles, if you think inflation is over that, it's like, why are we paying into a pension? Because you're just destroying your purchasing power, you're destroying money. And I know there's the tax incentive for it, and maybe I'll touch on that later, but there's more nuance to it than that. But like, you know, to me, I think 15% isn't a bad figure to put on it. Like when I look at my cost of living, I think that would be conservative with how much extra I pay for things now. And Bitcoin has been appreciating, you know, pick your figure, 60 million %, but it's deemed as risky. Maybe not to some people in the room, but maybe to some of the beginner people, perhaps, you're at that stage where we think Bitcoin's risky. And we'll talk about that a little bit today. Just to cover what is Bitcoin. And to me, it's all of these things and more, and it wasn't always that way. As I've learned more, you know, I've had different understandings, and I'm pretty sure next year, you know, please God, I'll have even more understandings. But it's a digital currency, it's a digital gold, it's a digital asset, it's a digital property, it's a digital energy, and it's a digital truth. And these are just sort of my understandings of it. The question is it money? And then you have to ask yourself, well, what is money? For most of my life, you know, money has been property. That's what people use as money, because money can have many different forms. If you're in prison, you know, you see the films, and cigarettes are money, they're trading. If you are in school, I remember in school we had Premier League cards, and we used to barter and trade them, and the scarcer ones were the ones that were more valuable. One of these might be worth 10 of these. You know, so the money can be subjective. If you're in Africa, apparently they use telephone minutes as money. They convert the money into telephone minutes because that can store the value better. So money has different forms. And traditionally in Ireland, I think we use property as money. You know, once you're doing okay, you get a second house, and that's your way of storing your value. So then is Bitcoin money? And then I some of you guys have probably seen this before, but for the benefit of anyone who hasn't, we'll just quickly run through it. But like, gold is money. I was sort of into gold before I was into Bitcoin. I'm like backwards, okay? Well, maybe not backwards, maybe it's just a way, but I think from spending time studying gold and understanding gold, once I was exposed to digital gold, it made sense very quickly. But gold is money because of a couple of characteristics. And namely, like, its durability, its portability, its divisibility, its fungibility, its recognizability, and its scarcity, and that allows it to store value across time. So an ounce of gold buys, you know, a fine man's suit 100 years ago, but this was only worth $20 100 years ago. But today it's worth nearly $2,000. So it's retained its purchasing power. An ounce of gold, and that's why gold has been money for thousands and thousands of years. And it's been good money. It has problems though. As our world modernized and became interconnected, the actual physicality of gold became the problem. Okay, and we'll talk about that a little bit later, because a lot of people think because you can't hold it in your hand, it's a bad thing with Bitcoin. But it's really the physicality of gold is why we sort of moved away from it. And to me, I just think of Bitcoin as digital gold because it sort of shares all the properties of the physical. Bitcoin is durable, it's just software, it doesn't wear out. It's portable, it's much, and a lot of these characteristics, like as everything digital, it's an order of magnitude better at most things than the physical. That's how the digitization disrupts the physical world. So, you know, Bitcoin is a lot more portable than gold. It's much easier. You can move Bitcoin anywhere. If I want to send this gold to Galway, it's going to take time. I'm going to have to insure it, you know, and it's going to take a few days to get it there. If I want to send 2,000 euros worth of Bitcoin, I can do it here on my phone, literally while I'm talking to you. It might be a little bit expensive at the moment, but don't worry about that if I'm sending on the main chain, but maybe I do it on Lightning, okay? It's fungible. So does anyone know how many Bitcoin there is? Or there will be? 21 million. Does anyone know how many are out now? Dinny style, like? 19 million, yeah, just round her up, lads. It's over 19. Okay, so there's 19 million Bitcoin created at the moment. And and in existence. Does anyone know how many Satoshis are in a Bitcoin? 100 million. So that means that each Bitcoin, you don't have to buy a full Bitcoin. I don't buy full Bitcoins, I wish I could. Okay? But I buy fractions of them because each Bitcoin is fractionable into 100 million Satoshis. There's 19 million Bitcoin in circulation at the moment, and it's going to take 100 years for the last 2 million to come into circulation. Does everyone understand that? Yes, Dinny. Theo doesn't. I'm going to explain it to you anyway.
He's saving a Bitcoin.
Because I assume you don't know this. But how I explain the halving is that every 4 years the supply of Bitcoin is cut in half. Okay? And sort of my understanding of that is, just as an entrepreneur and with companies, you're always trying to create scarcity. You're always trying to do something better than another company, and that gives you scarcity, and therefore that gives you value, and the market rewards you for that. So you always have to be different and innovative, but really it's just you're trying to create scarcity. And the way I understand Bitcoin's halving is Bitcoin is getting scarcer and scarcer. And let's just say we're in a hotel here now. There's 12 hotels in Dublin. We'll just say a magic city, Dinnyland. There's 12 hotels. And one morning I wake up and I'm like, you know what? I get my shotgun. She's a 5-shotter. It's illegal to fully load it, so I just put 3 shots in it. And I go around to 6 hotels and I say, lads, shut them down, or you're goners. And they do. And now there's only 6 hotels in Dublin. Is my hotel worth more? I think it is, because of more customers that need a hotel, need a bed for the night. My hotel is scarcer, my business is scarcer. Okay? And that's what happened with Bitcoin's halving in 2020, is that the supply of Bitcoins created every 10 minutes went from 12 to 6. And around this time next year, it goes from 6 to 3. So that sort of crude analogy, and there's obviously more nuance to this, but I decide with 6 hotels, I pull out the shotgun again and I go, right, 3 of these hotels are out of business. Now there's only 3 hotels in Dinnyland. Are those 3 hotels worth more? I think they are, because more people are arguing over 3 hotels instead of 12, instead of 6. And this happens with Bitcoin. Every 4 years the supply is cut in half. So next year we go to 3, and in 4 years time in 2028, we go to 1.5, and then 2032 we go to 0.75, and on and on and on. This is why it drags out so long to issue all the Bitcoins. Lovely. Everything in this pocket, everything in this picture is in your pocket. And I've been carrying this CD around for nearly 4 years since I started doing my Bitcoin workshops. I've literally done over 100 on Zoom and in person. And it's just another crude analogy, but it's just to show you that, you know, the world is trending more digital. We're spending more time online, and we're only going to spend more time online. And we've had loads of instances of it. Like, you know, we'll all remember these. Like, I used records when I first started messing around with music, my parents' records. Okay, and then we had tapes, and then we got these new age tech. But these are obsolete already, because I have to carry it around, it gets scratched, and there's 12 songs on it, and we just use digital music. And it fulfills everything that this does, but I can't hold it in my hand. Okay? And I don't see that as an inconvenience. I see it as an advantage, because I don't want to hold it in my hand. Why should I? Because I have to have this CD, whereas with digital music, I can access it anywhere. And you know, we've all the examples of things that we've digitized. You know, even with Zoom now and working from home, the world is just trending towards digitization super fast. You know, maps for photographs, all the normal stuff we've heard. Software is sort of taking over, and I think it's important. Like, you know, for me, in being an investor, you're always trying to look at where the world is trending, not where exactly the world is today. And sometimes that means that you're wrong for a little while, but I sort of prefer to be early than late to things. Okay? So we want to look where the world is trending, and just like we've digitized everything, well, now we've digitized money. Actual collateral is what Bitcoin is, and we can move collateral across space and time. We've actually created a digital gold. You know, and obviously some of you guys will say, well, Bitcoin's much more than that, Dinny, and I won't disagree, but I think it's a nice place to start if you're starting your journey. Thinking in the past is like holding it in my hand is a good thing, and I think the world is trending to like the opposite of that, which is holding it in my hand is a pain in the ass. Why can't we digitize it? Why can't I carry it on my smartphone? You know, and that's the way the world is sort of moving. Humanity only moves towards technology, and the growth is exponential. And exponential is pretty crazy. Like, exponential is folding a sheet of paper once, twice, 3 times. You may have heard the analogy, but if you fold it 50 times, 5 times it's like 2 mil tick, but another 45 times and you can get to the sun, and that's exponential growth, and that's how technology is growing. So while we in our lives, we don't really think much is changing or it's not really happening, if we look back 5 years, the world is completely different than it is today. We live differently. Look back 10 years, it's different still. In 5 years' time, I think our world is going to look totally different than it does today. So we only trend towards technology. In terms of investment, because a lot of people say, too late to Bitcoin, I need to find next Bitcoin. But if Bitcoin is the asset that a lot of us believe and think it is, we're actually super early in Bitcoin. Most of the appreciation is ahead of us. But even just comparing it to digital gold, the gold market is 10 trillion and Bitcoin is $500 million. So it's like 20 times smaller. And that's like saying the filing cabinet industry is 20 times larger than the cloud industry and all these server farms. And you're like, haha, doesn't make sense to me, it's the other way around. Okay? Or the CD manufacturing industry is 20 times larger than digital music. We know how that's played out. They flip pretty quick. And Bitcoin is money, and we're on that journey to monetizing. And I think, we're going to flip gold. We're going to eat into a lot of gold's market cap, especially the monetary value of gold, the money value. Maybe it's bigger than gold, and we'll just touch on that for a moment. Yeah, we're good. Humans have 3 basic needs, I think. Food, you have to eat something, unless you want to come and do a bit of fasting with me, but you do have to eat eventually, okay? And shelter. And then when we became specialized, we needed the ability to save so that we can, accumulate value, okay? Or save our time. And I think in all the other asset classes, they're just sort of like systems of scarcity. They're just an ability for us to save value, okay? And how we currently save, is bonds or stock market, or we get a pension, or we accumulate euros in the bank, or as I said, a popular way in most of my lifetime has always been property, that people, normal people deviate towards a second house and then a third house. Or perhaps some people are into cars and they'll collect some cars or wine or whiskey or anything that's scarce. You're just looking for a system of scarcity to help you save. And I believe that Bitcoin is a much better system of scarcity than all the other asset classes. All the other asset classes have the physical presence, physicality, therefore they have to be maintained, they have to be secured. But in terms of Bitcoin, it's just a digital version of it. And I see the migration of capital, money, moving from those asset classes into Bitcoin. Now I only see it as a trickle in my office in Swords. I meet with people, who own, let's say, property, and they're getting out of one of the properties because of the tax and the pain in the ass of getting the phone calls, and it's just like, I just want to keep the money. They're making it so hard for me to keep the property now. Again, everything's paid for. It's not worth it. If I can just put it in Bitcoin, it's just so much easier. I don't have the expense. So I'm just seeing a trickle. But I always think, whatever I see in my world, in my network, with my people, I'm like, all us humans are more or less consuming similar information. We all sort of act out of self-interest. And we all more or less make the same decision. So if there's a trickle happening in my office in Swords in County Dublin, there must be a trickle happening in the whole rest of the world. And the irony of Bitcoin is, unlike the other asset classes, I think the bigger Bitcoin gets, the better it gets. Okay, the better it performs. So because it's a fixed supply asset, unlike all the other asset classes that can get unstable when they get larger, we have the example of the property market in OE. It got too big and then the whole thing came down like the house of cards. Bitcoin actually gets better the more capital that moves into it, which is unique and different. And I don't think we've ever had anything I know we haven't anything like that that's of fixed supply, where the demand for it doesn't affect or can't affect the supply. But I believe Bitcoin's a better system of scarcity. Once you understand it, it's super simple, really. And that was the first thing I learned about Bitcoin was there's only 21 million Bitcoin. And to me, scarce things of value, and that just clicked. And then it was like, okay, how do we explore this? Is there definitely only 21 million? I do this just for fun, to show people that it's not too late to be accumulating Bitcoin and stacking sats. And this wouldn't be the actual price, it would probably be much higher, but just if you divide, let's say if half of the capital flows from the physical store values into digital store value Bitcoin, okay? It's probably not all, maybe half is too much. But you know, we're talking 10 million per Bitcoin in today's terms. Obviously some of the guys that'll chat later will be like, well, forget the euro, forget the dollar, we're going to be on a Bitcoin standard. And be that as it may, maybe that's true, and I'm like, well, don't sweat the small stuff, we're on a Bitcoin standard, you're even richer. But you know, even if we're not on a Bitcoin standard, there's still big opportunity to be stacking sats and accumulating Bitcoin. It's very early, and you still can't buy a coffee with it. Again, that's a beginner argument of, oh, but I can't spend it anywhere. And you know, that's okay, we were all there, but like, I don't own gold to buy coffees with it. Don't own property to buy coffees with it. You know, to me, first and foremost, they're investments. That's how I sort of treat them. Getting onto a Bitcoin pension and how that works. To me, it's more or less just a figure of speech is how I call a Bitcoin pension. There's nothing fancy. Most of you guys do this, some of you guys don't, and hopefully everyone might choose to. But you know, in its simplest form, it's just accumulating Bitcoin, stacking sats, and treating it like a regular pension. So a regular pension, every month, if you have a regular pension, hands up if you have a regular pension. Awesome, thank you. Do you decide to invest each month? No, the money just comes out of your account before it hits your bank. Okay, so it just goes in. You're just accumulating every single month, just accumulating. So you don't have a decision. You're not looking at the price of your pension to decide, should I pay into my pension this month? It just comes out of your wages, out of your wages, out of your wages. And to me, that's how I treat a Bitcoin plan, okay? In that it's just a binary decision. Yes, I do it. The money comes out of the account. You stack sats. I'm not interested in the price of Bitcoin because I expect it to be volatile. It's going to go up, it's going to crash. But if I look at it from a far enough distance, I can sort of see every time it crashes, it keeps getting a higher floor. Okay, and I accept the volatility. If there's no volatility, you know, there's no opportunity. So it's part of the ride, and it does take experience and education to get used to the volatility. But the basics of the plan is just to buy Bitcoin. Obviously there's more nuance, but I just want to cover some of the basics that we go through in the office. With a pension, it's to me, a pension is something that I'm not relying on my pension if the clutch goes in my car, the same way as you don't rely on your traditional pension. So we have to separate, you know, our living expenses and our savings and our holiday money from a pension. With a Bitcoin pension, you have to self-manage it. There's no company in Ireland that has it. When there is, I guarantee your financial advisor will be on the phone to you telling you it's a great idea and you need to come in immediately. But at the moment, there's not, which is good because you get to be an early mover and build it for yourself. But there's also responsibility, okay, in that you have to do it. You have to make the binary decision every week or every month to accumulate and stack. To me, a Bitcoin pension should be another iron in the fire. And what I mean by that is, I don't suggest people to get rid of your normal pension. It's going to zero, it's a Ponzi scheme, it's not going to be there when you get old enough for it, okay? I'm like, just create another iron in the fire, and it depends where your level is. As you get more understanding of Bitcoin, maybe you're more exposed, maybe you get rid of some of the other irons, maybe you don't. But as a beginner, it's just another iron in the fire. You know, accumulate as many assets as you can. If they're uncorrelated, happy days, you're hedged. You know, maybe Bitcoin's adoption is slower than I think, so I don't have all my eggs in that basket. I don't see harm in being invested into other asset classes. And that's just my understanding of, you know, investing and covering yourself and managing risk. There's two ways to learn. You can learn from your own mistakes, which is a terrible way because it takes all the time, or you can unfortunately learn from other people's mistakes. And in 2008, there was a lot of mistakes made, and you know, people who are close to me, I've seen them make mistakes, and they still follow them around today. So it's helped me to always be really mindful of managing risk and getting overexposed and getting over exuberant, to understand the bad side. What if we're wrong? What if you're wrong just for a short time? Can you survive it? We also need to understand the risk, not only of building the Plan B pension, but of not building it. Because if inflation is running at 10% to be conservative, which not many people here agree with that, we think it's higher. But to me, what that means is, if I have 100 grand sitting in a bank account, I can take 10 grand out and I can go to the bookies. Because I'm losing the purchasing power of it anyway, so at least if I gamble it on something, I have a chance to retain the money. It's lost anyway. You know, obviously I could stack sats with it or do something better than going to the bookies, but literally I have a risk-free bet there with the capital, you know, whatever I think the inflation rate is. Because just like when I was beginning my financial journey, and I was in my early 20s and I read a book on how to become a millionaire, and it was a full book that just taught me about compounding and compound interest. And I was just like, find something that compounds at this percent, do it for this long, there's $1 million. And it's just maths. And that was when I learned how powerful compounding is. And then, like now I really enjoy compounding knowledge and information and learning, and that's why I love, you know, going out there and going to events and stuff and listen to people speak, because you compound your knowledge, okay? But on the flip side of that, what most people don't understand, compounding can make anyone very, very wealthy, but inflation on the flip side, okay? It's like inverse compounding, it's the opposite of compounding. And the wealth destruction when you've got an inflation rate, you know, when you actually run numbers, it's just like you're sinking. It's so difficult. So the risk of not acting and not doing anything, you know, you've got to weigh that up to decide what your plan is. The next thing that I encourage people to do is to create a financial plan, a strategy. We run the Retire Early Club, and step 10 in that is the financial plan. I was going to say I made it, but my wife actually made the Excel spreadsheet. But it's just you plug in everything, all your expenses, all your assets, all your liabilities, all your debts, and it just spits out your wages, all your incomes, all your assets, and it just spits out numbers at the bottom, and it gives you a super clear picture of, you know, where you are. And you can't move forward with your investment journey, I don't think, unless you know where you are. Like Google Maps will take us anywhere in the world, but if it doesn't know where we are, it can't help us. And I think if we apply a lot of the basics from traditional investing and traditional pensions and take them over into a Bitcoin plan, and because we have to do it ourselves, we do have responsibility, but if we apply them tightly, you know, I believe we can build a pension. And the next thing is stick to the strategy. Most people don't, unfortunately, in my office. You know, the normal story is, yeah, bought a load of Bitcoin, went to buy it, 2021. Okay, how many sats have you been stacking? Nothing. Haven't done a thing throughout the bear market. And it's the total opposite that we should do. And this is why education is critical and key, because it's hard to buy Bitcoin and stack in the bear market. Okay? And it's easy to buy it in the bull market because everyone's doing it. But as investors, we know all this, but I just find it so hard to do it. Okay? And it's one of the biggest things I see is that people they're not leveraging the bear market, they're not leveraging when Bitcoin's cheap. And I'll be talking about trading in a minute. Automate it if you can, okay? Because I think automation is the best way. If you can find a platform that will just do it for you, and you just load it up with euros and it just bam, 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 it's going to save you from yourself. Because it's, whenever you feel you should buy Bitcoin, is, you know, in hindsight, it's probably like, I shouldn't have. And then when you feel you shouldn't, you should have. That's the way it always is. Okay, so if you just automate, you protect yourself from it. And then scale your security with your portfolio value. You know, with everything, getting started is the most important thing. It's the hardest step is to get started. And like, there's no point worrying about the finish line if you haven't got started yet. Literally, if there's absolute beginners in the room, you could just be on Revolut, sell an automation, and you've got a Bitcoin pension plan. You're ahead of the majority of the world. You know, and more experienced people can argue that's a terrible user experience, that's a terrible place to do it. First principles, you're stacking sats, you're doing better than most of the world. If that's what it takes, if you don't have the technical skills to do better, you know, there's a super easy onboarding experience. What about the tax? Hands up here who'd like to pay, if you hodl Bitcoin for 10 years, only $5,000 tax. All right. Who'd be happy to pay 10? 10 grand hodling for a decade? Who'd be happy to pay 100 grand? Maybe not happy. Who'd rather pay 100 grand? Sweet. Who'd rather pay a billion hodling Bitcoin for a decade? 10 million? I mean, very generous people to charge that. Okay. How I explain the tax is just like, the more tax you pay, the better. Because you get to keep the other 2/3. Which is kind of good. So I'd rather pay a million than 5 grand. Okay? So again, don't sweat the finish line. Get started and worry about that problem. Because there's going to be solutions. We don't know what this collateral is going to be like in a decade. You know, we can assume, we can guess, but we don't know. Alright? And I think there's going to be loads of different opportunities. So I don't worry about that. I'd be happy to pay a massive tax bill. If it is, I like living in Ireland, I like the Guinness, and you know, they're the rules of the road for investing. The horse has to be fed, as my accountant says. The man who takes the money, that's what I call him. You borrow against your asset, so the way we do a property, you know, so then you're not selling it, you're not drawing down on it, you're taking out debt and there's no tax on that. Again, I'm not going to give specific tax advice because I'm not qualified to. Maybe you loan it or you're earning yield off it. You know, and again, we've seen all that last year and all the companies blew up. But in a decade's time, you know, perhaps there's tighter regulation or not, or just more trustable companies, and you know, you can risk manage the amount of your portfolio that you want to put at risk. It'd be silly to put it all in, it'd be silly to put a large percentage in, but you know, we have the information. You can relocate. You know, at the moment, there's an option to relocate. You can put your ledger in your pocket, you can't do that with your property, you can't get on the plane with your gold coins or a load of cash. But you can, like, so it is an option. It's not an option for everyone. Some people might want it, some people might want it. Or you can just hire a rich person accountant. Do you think you could get a good accountant if you've got a massive portfolio that could save you a bit of tax? Of course you could. Trusts and stuff like that, charities, and suddenly you're done with a big tax bill. You know, I don't know how to do it. I've got my golden goose strategy. I'll give you my bonus tip first, and then I'll give you my golden goose. As I see it, just with my basic understanding, okay, is you should be aggressive early when you're accumulating Bitcoin. Maybe should is a strong word, but as I see it, it makes sense to be aggressive early. What I mean by that is, if I'm figuring out Bitcoin today, and I've came to it, it makes more sense for me to, and I decide I want to, you know, I know my net worth, I have my financial plan, I'm like, I need to be 10% exposed to this thing. It makes sense for me to acquire that Bitcoin sooner rather than later. Just looking at the way it's been monetizing, the way it's been going up in value. And an example of that is, let's just say at the very bottom of 2017, you decided, you've done that strategy, Bitcoin was 1,000 quid, okay? So you could risk 1,000 euros to acquire one Bitcoin, versus today, I don't know what the price is today, somewhere around 27 or 28, but you need to spend like 28 times more for the same risk. And if we continue on our journey of monetization, and we go through another halving cycle, Bitcoin becomes more scarce, adoption continues, the bigger it gets, the more people talk about it, the worse inflation gets, the more people are open to Bitcoin and learning about it. You know, so the same amount of risking, the same amount of capital isn't going to acquire you the same amount of Bitcoin, or if you want the same amount of Bitcoin, you have to give more money. So to me it makes sense. If you're going to do this, obviously it should be in a risk managed. There's no one size fits all. It's not financial advice, but you know, being aggressive early just makes sense to me. My golden goose sort of strategy is don't kill the golden goose. And how you kill the golden goose is, if you're stacking sats and you're appreciating, accumulating what, you know, I think is going to be the most valuable collateral that any of us can get, and whatever amount of Bitcoin any of us in the room have, I think is already an insane amount of wealth. Insane amount of wealth. It just might be for us. We might have to, you know, it might take a little bit longer. You know, but I think the tiny fractions are already insane when you actually do the maths on this thing. But how you kill the golden goose is selling too early. Like, I don't think you don't build a pension to cash out on the pension in 2 years and then start rebuilding your pension. That's not how pensions work. Pensions work with when you're ready to hang up your boots and go, I ain't working anymore because my pension is of value that I can live off this forever for as long as I think I'm going to live. You know, that's how the pension works. So I suppose I'm just trying to communicate to treat it as that. It's not about making a few grand. You know, it's about setting yourself up with pristine collateral that you want to hold, and you're incentivized to hold as long as possible or forever. Like, ways you can destroy it are by trading. In 2017, a buddy of mine, he bought 5 grand of Bitcoin and he got 5 grand of a dirty word Ethereum. Okay. At the height of the bull market, that portfolio with the assets that he had, because he bought the very bottom, just coincidentally, it was over 3 million. But that guy lives at home with his parents, and he's married, and his wife lives with her parents, and they can't afford a house. So like, where's all the money, Dinny? They traded. It went up to 12 grand, he thought it was zero, and then he was back and flipping and moving. So he destroyed the value of the portfolio by trading. We're all inclined to want to trade, to wait for the very bottom, but no one gets the bottom, and that's why I just stick to my DCA strategy. I just acquire. If I have capital on the sidelines, I DCA that in, but I never try to trade. And the reason I don't try to, I'm not saying you shouldn't try to, but be aware that it's a 90% chance you'll be wrong, because that's just the odds on trading and trying to time the market. 90% of the time we get it wrong, apparently. So I don't like those odds. The odds I like, okay, are if I stack sats and accumulate Bitcoin, and I can hold it for 4 years or longer. Well, 100% of the time, I'm increasing my purchasing power. So I like going from 90% failure rate to 100% success rate, and I don't have to meddle. Because when we trade and we try and get the bottom, it's great. Like, you can increase your net worth if you get it right, but there's a 90% chance you get it wrong, and therefore you destroy your net worth, or you double your time to retirement, potential time to retirement. My golden goose then is just, if you've accumulated a portfolio of Bitcoin, and we're still on a Euro standard, and we have data, let's say in a decade's time, there's 24 years of data. It's like Bitcoin is appreciating at 15% a year. Well, I can probably draw down on 8% of that, and my capital is still growing, my purchasing power is still growing. So I'm never killing the golden goose. But the secret is to acquire and hold the asset long enough until it's of substantial size, that as you draw down it supports your lifestyle. Like, so you're separating, just like your pension is separated, and you government don't let you touch it till you're 67, you sort of have to try and treat your Bitcoin plan the same. Now the irony is, if it does better, and you're too rich, and you want to retire early, well, you can. That's the beauty of it. Okay, but you should treat it as you can't, I believe, until you can. And that's how you don't kill the golden goose. It's been awesome to give you a little presentation. Look forward to chatting to you all throughout today. Look forward to all the speakers that are coming up. If anyone would like any help with that, and that we do, you can check me out on social media. I'm sure I'm always on the affecting things. Just for the event, I have a little discount offer for anyone who is interested in consulting. Just use capital letters Bitcoin in the discount box on the Bitcoin With Dinny website. And with that, I will say, Dinny out. Thanks very much, everybody.
Hello. Okay, thanks Dinny. That was great. Hope you all enjoyed that. Bit of basics there. And something to think about, Plan B pension. Instead of just diversify a little bit. We've been doing it with fiat for so many years now. Once you do your work on Bitcoin, you'll understand what it is and how it grows in value, goes up in value over time, instead of our euros is going down in value over time. So I like to save in something that is going up in value. Okay. So our next speaker is Con Stevens. He's from Armagh. He's got a background in sports science and is currently working at the GAA. He's been a Bitcoiner since 2017, and he's the founder of Time Chain Solutions. He's going to talk about why Bitcoin matters, why money matters to society, and the need for strong foundations. So, Con, give us a big hand here. Con.
Cheers. I'm going to apologise in advance because this presentation is a bit of a beast of a thing. That's why I've got the notes, just to make sure I'm still on time. I'm conscious that Foss is on after me, so don't want to eat up into his time. I threw this together a couple of weeks ago. I went on a dry run. It was 2 hours long, so I had to pull out slides. I spent the last week pulling out slides stuff because when I was trying to think about throwing together a presentation on why Bitcoin matters, there was actually so many reasons. So the things I'm going to talk about anyway. So I'm going to start off the majority of this first half of the presentation, Bitcoin's barely actually mentioned at all. I'm actually going to try and compare the build out of the electric grid with the build out of the internet and how that is comparable to what we're seeing now with the build out of Bitcoin. We're going to go into something called the societal stack, which very simple concept, very simple diagram. It was devised by another Bitcoiner called Alex Svetsky. I was talking to Alex Svetsky, I asked him could I use this, and he says yes, fine. And then we're going to talk about strong foundations, money and scarcity. And we're talking about money, the unit of the network, why Bitcoin is different from every other money we've ever had, and why Bitcoin, finally we want to conclude with why Bitcoin matters, sort of overarching view. And that's it. So the area I want to focus on when trying to set the context here is the build out of the electrical grid. And the invention that wired the world was the incandescent light bulb. So Thomas Edison obviously pioneered the light bulb in the United States. And his goal was to get lighting into the home of every citizen. So they wanted to replace old tech, which was candlelight and gas lamps, with the new electrical light bulb. Now, and it's important to consider the concept that he was getting lighting into the homes, not electricity. He was looking to get lighting into the homes. And this is a depiction from that there. It was a great capital cost to Edison himself. Obviously, he had loads of other patents and inventions before that. So this was all his own personal funding. He created the Edison Electrical Company, which became Edison General Electric, which then later became General Electric, which was the utility behemoth in the United States. So great cost, lots of infrastructure, heavy infrastructure need to be laid down, like digging up the streets, putting in electrical poles, and then eventually getting the electricity to the houses to light the lamps. This is what it would look like. This is the very first ever power station in the United States, the Pearl Street Station in Manhattan. And it was very simple. The power came from Pearl Street Station to the electrical poles and then into the houses to light the lamps. The first year there was only 85 homes after a whole entire year of building this out, and powering 400 lamps. And the year after that, 513. So really slow, really tedious build out. Started in the northeast corner of the United States and eventually spread. I think it wasn't until like the 1930s that it eventually got coast to coast. So very slow build out. And then obviously, of course, with every new technology, propaganda, naysayers, people who just don't believe in it. This is a famous poster from the time depicting people who are going to be dying by crossing the street because of all the electrical lines. But the area I want to really focus on is what came after. So Edison got lighting into everybody's homes, but we didn't realize it actually got electricity into everyone's homes. And the thing about entrepreneurs is entrepreneurs, they see issues, they see problems, they see opportunity, and they find solutions and they bring that to the market. So other people saw an opportunity to use that electricity for something else. So we had the build out of the first ever electrical fan, hairdryer, iron, 1905 Skinner Hoover, which was so heavy it needed 2 people to push around the living room. Very clunky, very messy, very inefficient. Some technology wasn't, not all these appliances were hits. This was electrified water. So for the morning after, placing the hands in a bowl of electrified water is said by physicians to be a sure cure for headaches. So if you had a few pints of Guinness, you could put your hand on electrical water and it would take it away magically. So not every invention is going to be a hit. And they also thought that electrified water cleaned your clothes without the need for soap. So, but this is a big one here. The first electrical toaster. So if you notice the actual cable, there's no plug. So if you remember, I was talking about Edison. He was getting lighting into everybody's homes. So in the very first build out, these first appliances, you had to, if you wanted to plug them in, you had to unscrew your light. You had to take the cable through your house from wherever it was and screw it in. And once you screwed it in, that's it. The toaster went on. And if you wanted to get it off, you had to unscrew it again. There's no on-off switches. And again, entrepreneurs, they see these problems, they innovate, they bring new products to market, and Herbert Hubble, I think it was his name, was invented the first plug, and then all these appliances started coming with ready-made fit plugs. And we had this massive 50, 60 plus year golden age of appliances came to market, and they kept improving with time. The technology kept getting better and better and better. And obviously the comparisons there with the internet is this slow, clunky, inefficient start that the internet also had. But the thing about the internet is it was able to have this inefficient, clunky, messy start, but actually grow much, much faster because that heavy infrastructure was already laid down. If you remember, the build out of the electric grid, they had to dig up all the streets and stuff and put down a heavy infrastructure really slow. Well, the internet was built on that top of that electric grid. It's built on that heavy infrastructure. The telephone cables and stuff was already laid down, so it was able to grow at 2,000% a year. This was the very first website. So it's important to know that the internet isn't actually the World Wide Web. The World Wide Web is built on the internet. The internet is a protocol, it's TCP/IP. It's a global system of computer networks that are able to connect and talk to one another, basically. So the light bulb was the app that wired the world. The World Wide Web is the thing that brought the internet to the masses. The internet actually existed pre-1990 in sort of like a closed system between research and government entities. It was sort of closed off, but eventually became widely accepted in the public, especially with the explosion of the World Wide Web. And this is an example of if anybody remembers the old days of the internet, there was no search engines. You had to go on to maybe a website and click down through indexes. In our house, we got the internet in '97, I think. I was like about maybe 7 or 8 years old, and I can remember it being a clunky mess, similar to those early home appliances, messy, clunky, inefficient. But we improve. Entrepreneurs, companies, they see improvements. We end up getting the ability to do commerce online. Obviously, you can see the user interface is a wee bit better. Photos, actually colours. We then got some social media. We were able to connect with people on the other side of the world via the internet. And then, like the electrical grid as well, the internet has its naysayers, its propaganda, people who don't believe that things are going to be different. Bitcoiners might recognise this face, Paul Krugman. Famous quote, by 2005 it will be clear that the internet's impact on the economy has been no greater than the fax machines. He said that in 1998. Thank you for that, Paul. So, in summary, for this little introduction is, these are the comparisons, the electrical grid and the internet. So small beginnings, sort of fast adoption, but then the internet again, faster adoption because the heavy infrastructure was already laid down. Propaganda and naysayers, inefficient, clunky start, competition and innovation, eventually improving things as we go along. But also, there was actually, you could almost call it civil wars between, for the electric grid, for example, there was a war of the currents, which was how best can we get how best to use currents. Was it alternating current or direct current? A little bit of trivia, that's how SEDC got their name. They felt that their raw energy, power-driven performances needed a name, so they went with SEDC, alternating current versus direct current. But the internet also had a similar civil war, where engineers, organisations, or even nation states weighed in on a debate of how to best get which standard would be the one that would be used. They ended up settling on the Internet Protocol Suite, which is TCP/IP. And the reason why they chose that one is because it was the most robust, because we need strong foundations if we want to build these great things on. And then, if we compare the internet to Bitcoin, well, the similarities are striking. Small beginnings, Bitcoin started by one person, and the network actually started when Hal Finney came on the network, and there was two people. Two people started Bitcoin. Faster adoption. If you track the adoption of Bitcoin and overlay it with the adoption of the internet, if you take it from 0 to a billion people, Bitcoin is tracking slightly faster than the internet. Again, because the internet ran on the heavy infrastructure that the electrical grid laid down. Bitcoin is now running on that infrastructure that the internet laid down, so it's able to adapt even quicker again. Propaganda, naysayers, inefficient, clunky starts. Bitcoin actually had an inflation bug in the early days where the supply would have exceeded the 21 million. If that hadn't been caught and patched up, then its long-term value proposition would have been shot in very early days. I think it was 2011 maybe. So I think we're at this stage now. It's sort of, Bitcoin is now as bad, like Bitcoin is bad now as it'll ever be. It'll never be worse than what it is now. It'll only improve from here, the same way the early internet only improved. The same way that the electric grid and the appliances built on the electric grid only improved with time. So we're sort of entering into a wave of competition and innovation where things will only get better. And like the internet and the electric grid, Bitcoin also had its civil war with fork wars, big blocks versus small blocks. I'm not getting into that, it's too big of a rabbit hole. So the picture I'm trying to build here with the introduction is Bitcoin is building on foundations. If you take the bottom one there, the electricity, it's the sending of electrical energy from A to B. Internet is the sending information from A to B. And Bitcoin is the sending of value from A to B. So we're building on those foundations. Maybe what's the next foundation going to be after? Is it going to be a layer on top of Bitcoin? Is it going to be Lightning? Who knows? Well, it's certainly way in front. So Alex Svetsky asked me to put this quote in for him. His quote, "Nothing great was ever built on shit foundations." So, and that is one of the key takeaways. If you take away anything from this this presentation, it's two things. Money is an integral, really important layer of society. It's actually essential. And the other one is that you need strong foundations if you want to build anything great. So this is a societal stack. Again, like I said, it's a very simple little drawing devised by Alex Svetsky. It's just to convey the idea that well, society, for example, is everything we've built. It's the layer of the earth that is attributed to us. It's everything that is complex that you see around you, all cities and stuff. That all it counts. And money is the first layer of society. Money is the layer that we build society on. And you'll notice the little line, the little black line there, because communication is the societal substrata. It is the predicate on which everything else is built, because communication is the prerequisite for cooperation, and cooperation is needed to build great things. If we want to build anything great, we need to cooperate, and we need communication to do that. So if we take communication, we can split communication into two layers. The base layer of communication is a biological ability to communicate. We share this with every single species on the planet. The upper layer is unique to humans only. So the upper layer of communication is a cognitive ability to communicate about abstract ideas. So that's basically things that aren't real. I'll give you an example. A chimpanzee can see a lion in the bushes and warn of its danger. That's a biological need to communicate. But only humans can see the lion and say, "Oh, the lion is the spirit ancestor of my people," or we can make up something about it. And you're probably thinking, well, what's so great about that? Like, why is the cognitive ability to communicate about abstract ideas so important? Well, it's about this here notion of hack and trust. So in communicating about imaginary concepts and shared fictions, which I'll get into, we're able to hack our biology to attain the trust required for us to cooperate in numbers that exceed our biological limits. So our biological limit is Dunbar's number again, which I'll get into in a second. In fact, I'll get into that now actually. Dunbar's number. So if you think of it, you can sort of think about this yourself. How many people here have more than 150 real close trusting friends that you keep in contact with every other day? More than 150. Very few, because we actually have a biological limit on how many close trusting relationships we can maintain. So if we're talking about hack and trust, all other species, they're fixed in reality, straight biology, and they operate in either flexible or large numbers. I'll give you an example there. bees and ants, they operate in large numbers. You'll never get bees sort of breaking away from the hive and forming a wee uprising or anything. They are rigid, fixed, and they only operate in large numbers. Wolves, lions, chimpanzees, they only operate in flexible numbers. You'll never get an army of 300 wolves coming over the hill. You know, they're small, flexible packs. So you will never get either or. It's always, or you'll only get either or. It's only large numbers or flexible numbers. But humans, through this ability to think cognitively, through abstract shared fictions, we are able to cooperate in both flexible and large numbers. So biologically, we would have been able to only operate flexibly, but with the use of shared fictions, which I'll get into here, through these here, shared fictions and others, these are just some examples, we're able to operate in large numbers. So laws, governments, kings, nations, castes, corporations, counties, sports teams. These are all human constructs. These are all things that we have created ourselves that only exist in our heads, and they are used for the sole purpose of cooperation. Take nation state, for example. Take a military. Let's say we have a military of 10,000 soldiers. How is it that if we believe that Dunbar's number, you can only operate, you can't really operate more than 150 relationships? How is it that a military of 10,000 people can cooperate together to overcome a goal or overcome an adversary? It's because they're all operating under the shared fiction of their nation state. And what is the oldest and the most successful shared fiction of all? It's a little thing called money. It is a shared fiction, it's a human construct, it's something that we have created in order to cooperate. So if we go back to the societal stack, before you get on to money and into money in general, we've added these wee stacks at the bottom here, and that is to convey the idea that as you go down the societal stack, you get more rigidity, robustness, simplicity. So the complexity is all up here in society. All the complex things is up here. We don't mess with the rules of physics. We don't mess with the rules of biology. We don't mess with communication. These are rigid, they're fixed, and they have fixed, rigid rules that we don't mess with. I'll take communication as an example. So language as an example of communication is a set of protocols. You have hard and primary rules, you have vowels and consonants. You have higher order rules like grammar and punctuation, and you don't mess with those rules. The complexity in our messaging and our communication comes from the fact that these rules are fixed. I don't create my own language with 6 vowels and 340 consonants and try and speak to you. You wouldn't understand what I'm saying. We abide by the rules, and it's that rigidity in the rules which gives language its power. If you want to create music, poems, stories, etc., you don't go around and mess with the grammar and mess with the vowels and stuff. You stick to the rules. So as we can see, we need strong, rigid foundations. The stronger the foundations, the better, because strong foundations allows us to build complexity higher up the chain. So eventually, right here, we're getting there, money. So money, I'm not going to go into too much about barter. A lot of people think that money started off as barter. You have vegetables, I have fruit, I'll trade you your vegetables for your fruit, whatever. But that is so inefficient. It's such an inefficient. We probably never actually really used it, other than with people who we really know. Like, you would never. I can't see any time in human history where we would have travelled a few miles to another settlement and started trading like this. It would have been so inefficient, wouldn't have got anything done. So what's interesting is the earliest form of coherent human writing is actually ledgers. So money was a way for people to cooperate in small trades, because they kept a tally of, like, if you went out and hunted the boar, and you went out and caught the berries, and you went out and built the fence or whatever, we could keep track of who was doing what and tally it up. And what's interesting is, tens of thousands of years later, we're back to square one, because Bitcoin is, of course, just a ledger. So this is a sort of quick rundown of the ancient money we had. We started off with promises, like I said, with the ledgers. Then we have eventually moved on to commodity money, so sugar, salt, tobacco, etc. And the reason why we moved on to commodity money was we needed units to make the money more transportable. And when we started to create civilizations and sort of branch out and sort of trade with other people, we needed to be able to carry something in order to trade with the next people. So we done this with useful things that were useful to us: sugar, salt, cattle, etc. But then we started, again, going back to our ability to think abstractly and create things. We then started abstracting that value onto things that weren't necessarily useful. So shells, rocks, rice stones, beads. You can make a wee necklace with the beads or whatever, but mainly these were used in trade. And then eventually we actually built on that. We actually improved those abstractions to metals: bronze, silver, and gold. Now, what's the obvious improvement of those metals over things like rocks and shells, if anybody knows? Anyone shout out? No? Scarcity. Scarcity. It's for example, if you lived near the coast and you had loads of shells and you travelled 1,000 meters inland, you could probably get loads of things for those shells. Just go back and pack your bag full of shells again. Because inland shells are scarce, you don't find shells 1,000 miles inland. But if you live near the coast, you have bags of them. And eventually, as we opened out as society and started going into these different settlements, we had to find something that was universally scarce. And we found these metals because they're hard to produce. They're really hard to get out of the ground. And eventually, of those metals, gold became the dominant money for thousands of years. Then, more modern money, we sort of created coins out of them: gold-backed paper money, fiat paper money, plastic shards, and now digital money. I'm not going to spend too much time on that. So, money. Denny went through some of these here just before about the traits and attributes of money. But the primary functions it should be is store of value, medium of exchange, and a unit of account. And if we take a new money, that is generally the journey that money will take. You'll never create a money and it'll just go straight to unit of account unless it's, of course, government issued. But the natural journey of money is it started out as small collectibles. For example, gold will start out as small collectibles. If enough people collected it, it became a store of value. Enough people stored that value and wanted to transact in it. It then became a medium of exchange, and if enough people started exchanging it, then eventually people started pricing their goods and services into money, and that's how that natural journey of money comes. And then obviously some of the traits, Denny mentioned some of them: fungibility, recognizability, portability, divisibility, durability, and the one there is probably the most important: scarcity. So scarcity ensures that the value is maintained across the dimension of time. It's at the core of how we intuitively define value. So if you think about things, don't even think about money, think about things in your life that are close and personal to you: your family and friends, personal trinkets, art and time. These things are important to us because they're scarce. Now, let's say your grandmother gave you a nice bracelet. Well, that bracelet, there's probably 1,000 of them, they're probably in the shop or whatever, and there's probably 100 other people have a bracelet just like that one, but they don't have that bracelet. That bracelet was given to you by your grandmother or whatever. It holds some sort of sentimental value, and the reason why you attribute so much value to that is because it's unique. And uniqueness is a derivative of scarcity. And that is a critical ingredient for money if we want the money to hold value over time. Imagine we use grass as money. You go out into the field and fill your boots. So we need the scarcity in the money to maintain value over time. And this is what happens over a long enough time period when you do not have scarcity in the money. It bleeds value. Now, it bleeds value slowly for something like a reserve currency in the dollar, but if you lived in Venezuela or Lebanon or Argentina, that scarcity bled much quicker. So we're like I said, humans have developed an ability to think cognitively and abstractly. So what would we do if we were designing from the ground up the ideal money? We can think about what characteristics and what traits we want to have in the ideal money. So let's design it. What would it look like? Well, there's two parts. There's the unit and there's the network. So the unit if we're thinking about a unit of money, we want it to be impossible or hard to counterfeit. You don't want the money you have that can easily be counterfeited by someone else, then it wouldn't be functional. You want it to be hard to produce, so you want to have a high stock-to-flow ratio. You don't want people to be able to go out and fill their boots with all the money, then they can go and obviously buy up all your stuff. Sorry. And then the last one is limited supply. So again, going back to that there trait of scarcity, we need that scarcity in the unit for it to maintain value over time. Now we're talking about a network. Now, the US dollar is the global reserve currency because it has the biggest network. It is accepted globally. It has the most participants. If France wants to buy some energy off Saudi Arabia, they have to pay in US dollar. So the US dollar is used globally for trade. So we're talking about the ideal monetary network. We want it to be resistant to change. So we want it to be immutable. We want it to be resistant to shutdown. If you're using a monetary network to do trade, you don't want to log in someday and the network's down, you can't do anything. You want it to be resistant to censorship. If your values and beliefs are against someone who controls the network, they can censor you, so you want it to be resistant to that. And you want it to be resistant to manipulation and control. You don't want anyone or any single entity or any group of entities to have control over the network. So the network must do, we talked about the rules in language, those first order rules and those higher order rules, and never compromising on those first order rules. You don't mess with the rules of language and stuff. And it's the same with a monetary network. You want it to have a few first order rules that you never ever ever compromise on no matter what. And those first order rules are send, receive, and store. If the ideal perfect monetary network only done three things, which was send value, receive value, and store value, then it would be enough. That's okay there. Then you've got some higher order ones like escrow and timestamps, but those are just derivatives anyway of send, receive, store. So send, receive, store is the three first order rules that you do not want your network to ever compromise on. And again, going back to the internet, why was TCP/IP chosen as the protocol for the internet? It's because it was the most robust, it was the most secure. So why, finally, on Bitcoin, right, getting there. So why does Bitcoin matter then? We just described some of the ideal traits, like if we were designing the perfect money, what it would look like. Well, it just so happens that Bitcoin has all those traits of the ideal money. So Bitcoin is the most organic, stable, powerful form of money that we've ever seen. It encompasses all those great traits that we just listed about the unit and the network. So it has both sides of the equation, both sides of the coin. And as we've established, money is the foundational layer of society. It is the layer on which society is built on. And then, if we are going to, I think some people might have seen a chart that looks just like this. Traits of money. So you're sort of taking the traits of money, gold and fiat, and you're listing them up. You're measuring them up against Bitcoin. And Bitcoin just scores, out of the park on absolutely everyone. There's one here that's not. There's one here that's not on the chart. It's established history, which it actually scores purity on versus gold, but that just takes time. So the only thing that's going to change that is time itself. So the reason why we had gold and fiat is because there was trade-offs. Dinny mentioned some of them, and with gold, it's not very portable, especially if you have a lot of it. It's not very divisible. If you have to shave off a wee tiny bit of it to pay for a coffee or something. So we needed fiat. We needed gold and fiat sort of working in tandem because there was trade-offs for both. We needed gold for saleability of value across time, and we needed fiat for saleability of value across space. If we wanted to move the money around, that's where fiat came in. But Bitcoin does both better than both. Bitcoin saves your value better than gold, and it's also more transportable than fiat. And there's just a wee chart. I'm trying to remember the Bitcoiner that designed that, Anil or something. Can't remember his name, but nice little easy chart that shows if you're scoring out money on saleability across space and time, Bitcoin is way ahead on both. So why Bitcoin? Why Bitcoin? Well, here's just a few reasons why. So Bitcoin has a organic grassroots growth. Bitcoin wasn't marketed as some sort of company's product or anything. Some guy had an idea, he put it out there, and he had to wait 6 days before Hal Finney came onto the network and says, okay, this is a cool little thing, I'm going to spin up a node. Them two, they engaged in the competition to mine the first block. And that just spread from there via word of mouth, via forums and stuff. It was real organic sort of growth. It wasn't a CNBC launch ICO or anything. It was nice and organic in itself. So no founder, no owner. That's another massive thing. If Satoshi was some famous person and he says, I'm going to launch this Bitcoin thing, well, the way to attack the network in the early days would have been through the founder or the owner. So him being anonymous was actually a very integral part of Bitcoin's growth in the early days. The unit's absolute scarcity, absolutely essential, relentless focus on first order principles. It's native of the internet, so it's a native currency of the internet. Again, like I said, it's not some product that was pushed by a company. And it's an anti-fragile network. If you have a fragile network, the first instant that network's attacked, it rolls over and it's done. If you have a stable network and it's attacked, it sort of stays the same, it withstands the attack, and that's okay. But if you have an anti-fragile network, every time the network is attacked, it actually gets stronger. And that's Bitcoin. Every time Bitcoin has an attack, it sort of fends off the attack and then it patches itself up and it's even stronger and it's hard. The best way to attack, if you were looking to attack Bitcoin, the best thing you could possibly do is probably do absolutely nothing and just hope that it goes away. Because every time there's an attack on the network, every time it's tested, it passes the test and it becomes stronger again. So if we take one of those things, the Bitcoin recipe, all the things that you would think about when you think about Bitcoin, you think about computer science, cryptography, game theory networks, incentive structures, decentralization, proof of work, all these buzzwords that you would associate with Bitcoin. The bottom one there, the data structure, the time chain, blockchain, as other people call it, Satoshi called it time chain. The problem is some people have seen this recipe and thought they'll take one or two pieces of it and they'll create a better Bitcoin, they'll create something else, they'll create something that goes faster, or maybe, if you think about the Bitcoin recipe as a cake, it's the exact same way of thinking, okay, I'll take the eggs and I'll take the sugar and I'll whisk them really, really fast and I'll make a better cake. You only made sweet scrambled egg, you didn't make a cake. So you can't really take little parts of the Bitcoin recipe to try and make a better Bitcoin. And that's where you get headlines like this. Why BlackRock is bullish on blockchain but not Bitcoin. It's like, oh no, I don't like Bitcoin but I love blockchain. Well, let me crucify that now. So we can sort of split blockchain up into two broad categories. Blockchains without a token of value and blockchains with a token of value. So this is why blockchains without a token of value do not work immediately. You can discard them immediately. Because the purpose of a blockchain is to achieve decentralization. It's a distributed ledger technology. You don't want to have any control over the network. You want to distribute that validation process. So you want to decentralize the validation process, and the best way to do that is a consensus algorithm requires competition. So for Bitcoin, that's proof of work. Miners compete to mine the block, that's the competition. In order to have a meaningful competition, you need risk and reward. And in order to have a reward that's meaningful, you need an intrinsic token of value. That intrinsic token of value is what keeps the miners playing fair. You don't want them to mess with the network, you don't want them to censor anyone, you want them to play by the rules, you want them to be honest, and that maintains the security. So if you take the intrinsic token of value out of that there, then you don't have the basis for the competition. If you don't have the basis for the competition, then you don't have the security. And if you don't have the security, then you have to validate the process centrally. And if you have to validate the validation process centrally, you're going against the purpose, which is to achieve decentralization. And then you're just left with a bicycle with square wheels. This is like complete, like having data in blocks is an extremely inefficient way to centrally manage anything. You're better off with just a central database. So if you ever come across a blockchain or a company that says they have a blockchain but they haven't got a token of value, you can just immediately discard that. I'm putting it in the bin. It's not useful at all. And then you get to the ones with a token of value. Well, the thing about a token of value is if you have a token of value that can be traded in an open market or exchanged for real world goods, you are essentially competing as a money. And human history has shown us that the money with the best monetary traits will always win out. It will always become the dominant form of money. And as you can see there from the chart, crypto versus gold versus Bitcoin. Bitcoin eviscerates everything in its path, and crypto has those deficiencies. Now, you could almost argue that crypto is a slight improvement on fiat. But that's like putting lipstick on a pig. It's not a huge improvement really. So Bitcoin is the best money we've had for scalability across value, or scalability of value across time and space. It's why any blockchain without a token of value won't work, but any blockchain with a token of value might look like it's going to work in the first couple of months. But again, as we said, when a money is like failing on certain properties over a long enough time frame, it's always going to lose out. And then this is the blockchain trilemma. So very quickly, Bitcoin prioritized security and decentralization at the expense of scalability on the base layer. So when you think about something that's going to hold your value, what do you want? Well, above everything, absolutely, you want security. You want, if it's going to be holding your value, the value that you put, you go to work every day, you give up your time, your effort in order for in return for money, you want that money to be secure. If we're thinking about a new monetary network, we want that to be decentralized. We don't want anyone to have control over that network. So Bitcoin prioritized decentralization and security at the expense of scalability. And the thing about all these other crypto projects is they're trying to get out ahead and prioritize scalability. And what you'll notice is that comes at the expense of both decentralization and security. So a new token springs up, everybody's all excited. 1,000% gains, oh yeah, cool. Our blockchain does somersaults and makes you your coffee, tucks you in at night. Whatever sort of little fad that's attached to these new blockchains, and they prioritize scalability. Sooner or later, down the line, you start running into problems of centralization and security flaws, and they always break, and they censor transactions. And then eventually you're left holding some VC's bags, and that always ends with tears. So why Bitcoin? Getting there. Finally, right. Bitcoin is not its code, it's not its community, it's not its miners, its block size, or its history. It is all these things combined. And that's why Bitcoin is the only one that matters. It is the recipe, the entire recipe that makes Bitcoin what it is. That's why no other money network or copycat will ever be able to replicate it, because you can't replicate the environment that Bitcoin was forged in. Bitcoin grew up in the wake of the biggest financial disaster since the Great Depression. You cannot replicate the scars of the Civil War, the fork wars. Those all happen organically with time, and you can't replicate that. You can't spin up some blockchain with preconditioned battle scars of a civil war. You can't replicate the grassroots organic growth, this idea that Bitcoin was put out there and it just sort of took off from a few anonymous forums. Every blockchain now has a marketing team behind them, has an ICO, it's pushed by a company or something, given to celebrities to push on Twitter, whatever it is. So there's no real organic growth. If you're gonna actually copy Bitcoin and start sort of anonymously and prioritize decentralization and scalability, and you're not going to push it with a marketing team, you're going to try and get that organic growth, but you're still going to fail, because what you're not going to have is you're not going to have Bitcoin's network effect. Bitcoin is now I could have nothing on screen and you'd recognize that symbol, for example, because Bitcoin is now out there, it's in the open, it's you ask anyone, random person on the street, name a cryptocurrency, they'll probably go Bitcoin. Because it's out there, it's now the focal point, it's the shilling point, it's the one that is the most recognizable, is the biggest market cap, the biggest amount of users, and that's already enough of a head start that if you were to compete fairly against Bitcoin, you would get absolutely eviscerated. So why Bitcoin matters? Bitcoin is hard money, it's a stable, secure monetary network, and it has the best chance of success. So Bitcoin is a monetary phenomenon, it's disinflationary. We've touched on it multiple times, the supply of Bitcoin can never exceed 21 million. It's a hedge against corruption or incompetence of the traditional system. It's a self-sovereign unit, so Bitcoin is something you can take with you anywhere in the world. You can take it with you in your, if you can remember 24 words, you can take it with you in your brain if you want. I don't recommend that. It's truly scarce. I think Denny touched on it earlier. Bitcoin is the only asset whose supply cannot, will not ever be changed by any increase in its demand. If gold goes up 100x while we're at this conference, you're going to go home and dig up your garden and try and find some gold. And eventually, if enough people do that, the supply of gold onto the market will increase because people will dig for it. Any gold miners will work overtime, they'll stay in the mines until they get more gold. If the price of Bitcoin goes up 1,000x while we're at this conference, what happens to the supply? Absolutely nothing. Absolutely nothing happens to the supply of Bitcoin, no matter what the price is doing. And that's because it's hard-coded, you can almost, with absolute certainty, table out Bitcoin's supply schedule right the whole way to 2140. So it's a stable, secure monetary network. It's a robust monetary system that is built on something secure, stable, game theoretically sound, and digitally native. We didn't build the internet on candlelight, we didn't build cars to run on horse tracks. So the next generation of human cooperation shouldn't be built on old tech. We are designing new tech with Bitcoin for new rails, for a new monetary network. And we'll go back to what we were saying about the heavy infrastructure of the electrical grid, that sound, heavy, robust infrastructure that the internet was able to build on, which was TCP, the most robust protocol. So again, the picture I'm trying to paint here is you need strong, stable foundations if you're going to build anything great that's going to last the test of time. What happens if you don't build something with great foundations? You get the Leaning Tower of Pisa. So the Leaning Tower of Pisa actually we have to constantly intervene, constantly put in counterweights, constantly fix it up, constantly. And if we built a monetary network that was constantly changing, constantly moving, that we wouldn't be able to build anything complex on top of it. And that's what we have now with our money. We have a money whose foundation is always shifting, and that's having a dramatic effect on society. If you go back to the societal stack, money was that layer underlying society. When we have changes in the money, that has negative effects on society, and I think it's pretty easy to see all those negative effects that we're seeing in society today, and a lot of that can be attributed to those changes in the monetary layer. And it has the best chance of success. So the best chance of separating money and central institutions, returning power to sovereign individual, transact value across time and space, how they see fit, without the need to trust a third party and without the threat of censorship or value dilution. That's a wee nice little paragraph to finish off there. So Bitcoin is the shilling point. It is the thing that has the best chance for us to build on, to build a new monetary network on. And in closing, Bitcoin matters just like the internet matters, just like the electrical grid before it matters, because it's a new, robust monetary operating system. When we were in those golden ages of appliances, when you had the big clunky Hoover and the big screw-in toaster that I showed in the photo, if you were there living in that time, you probably would have thought, this electricity thing's a big pile of waste of time. It's not really going to do anything. And yet, can you imagine your lives now with no electricity? It's hard to imagine. It's fundamentally changed how we lived. And you can do that the same with the internet. If if you were in the internet, well, some people in the room might remember back to the early days of the internet, 94, 95, whatever, real clunky, hard to use interfaces, can't really do anything on it. You could be forgiven for thinking at the time, it's just a wee fad, they might use it in business, but I'll never use it. And now everybody has the entire human history knowledge in your phone, in your pocket. It's accessible instantly. So those two things, the use of electricity, the use of the internet, they have dramatically changed the course of human history, as how we live, how society is built out. And it's like, you'd be forgiven for thinking that we've went through that wave and we're at the end of it. Well, the internet's still building out. There's still places in the world that doesn't have access to the internet. Still places in the world that probably doesn't even have access to reliable electricity. Side note, look into Gridless. Other Bitcoin companies that are trying to bring reliable electricity to those places that don't have reliable electricity, and they're using Bitcoin mining to do that. Something to look into. So what I'm trying to say this year is we're possibly at that time, that early internet or that early electrical grid with Bitcoin. We're in those early days where the changes that's going to happen for the course of society is all ahead of us. You can't really tell you're in it now, but when you look back in 20, 30 years, you'll think, yeah, it was obvious, it should have been obvious. So, and that's basically it. Bitcoin is a new robust monetary system that will provide a foundation, a strong, robust foundation that we can now make improvements in society. It's an anti-fragile, censorship-resistant, decentralized, peer-to-peer monetary operating system, and we're going to build on it. And this is the part where I'll probably finish with telling you about Bitcoin, whatever. No, what I'm going to finish off and tell you is to study Bitcoin. Get down into the rabbit hole, roll the sleeves up and dive right in. I found Bitcoin in 2017, but I didn't actually understand it until maybe about 2019 when I started looking a wee bit closer. But even then, I was only doing it like maybe a couple of hours a week. Then COVID happened, and I got furloughed, and I was sitting at home, and nothing to do. There's only so many Netflix shows you can watch. So I thought, okay, this Bitcoin thing, I'm going to dive right into it. And I literally treated it like a full-time job. I was getting up in the morning, getting my breakfast, and then literally I was like a 9 to 5, sitting down in front of I would start the day off with a question I didn't know the answer to. I would attack that question until I got the answer. And Bitcoin's this strange thing where you think you're going to learn about cryptography and computer science and economics and stuff. It just takes you in this whirlwind towards every facet of society, because money touches every facet of society. It's like it has tentacles that spread to every little thing we do. Everything we do, you know, there's money somewhere involved along the line. I remember some days I'd be looking at how Bitcoin works under the hood with, you know, the way the blocks are formed, whatever, and I'll be finishing off with ocean thermal energy conversion and how Bitcoin can be used to use ocean. It's a whole other, you get taken down all these different rabbit holes, but I'd say just embrace it. You know, everybody's busy. Not too many people have too much time to throw around. So if you are tight for time, try and get a set schedule, like 8 o'clock on a Wednesday or something is your Bitcoin hour or whatever. Set aside an hour to really, you know, tune everything else out and really focus on trying to understand this, because your future self will thank you for it. And if you have children or grandchildren or whatever, they'll thank you for it too, because they'll benefit from it as well. And yeah, I guess I think we'll knock it off there, I suppose. That's about it. If anybody wants to discuss anything that I went through about there, you can throw something at me. If you have any different opinions or you don't agree with something, I'd like to hear that as well, because I'm always trying to develop my own thoughts, always trying to see different points of view. And if you believe blockchains with no token value have value, no. No, they don't. So just say it both more times. So so yeah, does anybody want questions? Any questions? No? Oh, that was a lot. That was that. And that was the shortened version.
Any questions, guys? Anyone ask a kind of question?
Yeah, he's down there. Danny.
Keep your hand up there and let's see it.
Just a quick question. We had a slide earlier on electricity and how it's enrolled into our society as it is now. Can you see, I know you're saying that other cryptocurrencies, like you just flagged that, it's Bitcoin, but it's like when you brought in electricity first and let's say plugged in that toaster that you had on the screen, like can you see, let's say, like a material myself, and could you see like something coming in like that, and obviously it's not going to, I wouldn't see it passing it out, but like being there along with it, like you can't deny that the upgrades and what they're providing in Ethereum, like it is a bright future for it, but could you see it matching when Bitcoin does eventually rise? Can you see Ethereum rising with it, like alongside it?
Yeah, I think if you compare it to some of those home appliances, but it's easy to look at Bitcoin and think it's like you can compare it to a tech company or like a home appliance in those golden ages. But Bitcoin isn't an appliance, or it's not a company. Bitcoin is, think about it as the electrical grid. Bitcoin is the internet. You know, don't think of it as a product or a thing. It's like, so what I would say there is Ethereum, you see Ethereum doing all these cool stuff and whatever. Going back, I'll just go back to here. Going back to this, the network, first order rules. What should it never ever compromise on? Send, receive, store. You should never ever compromise on send, receive, store. What is Ethereum compromised on? Send, receive, store. Ethereum was already compromised. Once you have, if Bitcoin were to, for a whole day, compromise on send, receive, store, that's it, it's over. Because once you compromise on the first order rules of that there, then you introduce trust. And if you have to introduce trust, the trust that would never happen again, then you have to trust it. And what we're trying to build here is something that you don't need to put trust in. We're trying to introduce something that you never have to have, you never have to trust anyone or trust the network itself. You can verify at all times that the ability for you to send, receive, store is there, it's working, it's always on, it doesn't take Christmas off. And I'd say that, you know, Bitcoin has a 99.7% uptime or something from its creation. So nothing on the internet since Bitcoin was created has had as much uptime. It's the most robust, stable network on the planet. And it's easy to get lost down these tracks of other cryptocurrencies. Like I said, they will prioritize scalability. And it's only, you know, have you ever seen the Ethereum roadmap? Yeah, so if you look at the Ethereum roadmap, it's the most complicated diagram I've ever seen in my life, because they are prioritizing so much scalability. They're always having to touch it up, always having to intervene, always having to make adjustments. Bitcoin's actually probably even close to ossification right now, Bitcoin. I don't think we should go for ossification really just yet, but we're getting there, and that's because we prioritize decentralization and security, and those first order rules, those send, receive, store. You can always send, you can always receive, and you can always store value on the base chain, and that is enough. And all the scalability is going to be built on top. All the things that maybe Ethereum, all these other things can do, well, we can probably do that in time on other layers of Bitcoin, but we don't need to do that right now. What Bitcoin's doing right now is focusing on getting those robust foundations in place, those hard, fixed, rigid foundations, so that these things can be built on, and if those things break, they don't compromise the layer below. So when you introduce all that complexity on the base layer, it's always changing, it's always shifting, and you're always having to intervene. And if you're always having to intervene and things are always changing, it's going to be very hard to build on top of that, because if the foundations are always moving, the things that are built on top of that are going to collapse. So that's the reason why I stick to Bitcoin only, is because it's simple, it's rigid, it's robust, and it's secure, and it abides by those first order rules. Never compromises on send and receive store.
Cheers. Anyone else for a question?
Just interested about yourself. You're saying in 17 you got into Bitcoin, and then in 19 you got into the more depth now. So you obviously doing all work yourself. Just interested in your background. Did you start like just sort of with investing yourself certain amounts in like DCA or something? And what do you see? Just jumping in. What do you see your role in Bitcoin now? Like Dinny said, he's looking at pensions and making a pension for yourself. It's like, now that you've been grabbed by Bitcoin, what's your role? How do you see it?
Yeah, grab by Bitcoin, that is the absolute best way to I tell you what, actually, for any of the newcomers that are not ready for this, the exits or back there, the Bitcoin will grab you, it will take your life and it will flip it upside down, and it will put you on a severe roller coaster. Yeah. So yeah, 2017, I found Bitcoin the way most people find Bitcoin. Bitcoin doesn't have a marketing team, but if it did, it would be its obviously it's price volatility, and that's how I found. It's how 99% of people find Bitcoin. They see the pot of gold, the pot of Bitcoin at the end of the rainbow, and try and chase it. And so 2017, yeah, I was in Preston. It was last year, my degree in Preston, doing sports and similar background to Dinny, actually, sports and fitness. And the way I structured the final year of my exams was to have no final exams. It was a module-based one, and I had this big gap. I had everything done. I had a presentation to deliver in the first week of May, I think, and I had everything else done at the start of April. So I had this big, like, 5-week gap with nothing to do. So I went to the library, because I'm paying £9,000 a year for this freaking thing. I'm going to make use of it. I'm going to go to the library. I'm going to learn about something. I'm going to go into a full-time job. What do I need to learn about? And so I went down the rabbit hole of investing. I picked up The Intelligent Investor by Benjamin Graham. Started going down there. Started looking into stocks and stuff. And then there was this little paragraph of a different book that said alternative investments, and I was going through fine art and wine and stuff. And then there was this little thing, cryptocurrencies and Bitcoin. And then when eventually that stuck with me, and I sort of over the summer I was working away, saving a bit of money. I thought, okay, I'm going to start a portfolio here. And obviously, I was into my big tech stocks, and I didn't have any bonds because I was young. And I decided to put a little bit of money in Bitcoin, and then I travelled Southeast Asia, and I sort of cut myself off from Bitcoin and investment stuff. Unbeknownst to me, when I was in Southeast Asia, I sort of cut off from everything. Bitcoin had went on this massive friggin' roller coaster. When I came home and seen that, and I was like, oh frig me, I just missed out on the jackpot, missed out on the lottery there. But it didn't go to zero, which was interesting. So I thought, well, it hasn't went to zero, maybe it'll do that again in a few years, and I can cash out then. And so I kept it. So it was probably a good thing. If I had been paying attention to it, I probably would have sold the Pico top, or bought the Pico top and sold the Pico bottom, and be wrecked, and maybe went looking for the next Bitcoin. Maybe it'd be a Litecoin Maximus or something. So looking back now, I was probably very lucky that I actually wasn't paying attention to that. And then so I think it had like a small little jump in 2019 one time, and I thought, well, why is this thing not going to zero, or why does it keep doing these little things? And that's when I sort of started looking into it a wee bit more. And then obviously, as time went on, I sort of thought, okay, there's actually more to this. And then deep dive, learned more, kept learning, a bunch of reading, loads of books, loads of podcasts, and Clubhouse, back in the early days of Clubhouse. So everything, so where do I see myself now? Basically just helping any way I can. Some people have the idea that they want to go get out there and do loads of podcasts and sort of do talks and Bitcoin Miami and get out there and get loads of followers and stuff. I just sort of stick to my own little circle. I'm always trying to orange pill the people that I care about and the people that are close to me, because and then helping, you know, the community here. Ireland probably never really branched out from Ireland, so there was actually a wee announcement there on, which I'll be part of as well. But yeah, my role with Bitcoin is just trying to help as many people in my circle that I can touch understand this thing, and at the very least get off zero. Even if they don't understand it, just make sure they get off zero and get something. By the way, if anybody here is on zero, talk me out there, I'll send you a sat. I'll get you off zero. Fire Light Network.
We'll take one more quick one.
Yeah, one more, yeah.
Quick one.
Foss is a coming.
Quick one. Just a couple of things. I remember when I first got into computers, they blew my mind, and then we got a WYSIWYG, and then we got the internet, and then we got the crypto blew my mind as well. And the latest technology to blow my mind is artificial intelligence. And I'm just wondering what your view is that how artificial intelligence, what role it plays, or has it got a role to play in DeFi or cryptocurrency going forward? Because artificial, it's so new, it's so young, and I don't know where it's going to be in 5 or 10 years' time, but at the rate it's growing, it's just, you know, mind-numbing. So is there any role for it to play in the development of cryptocurrencies or in Bitcoin?
That's a good question. Actually, I'm trying to keep up with all of you as well with this artificial intelligence thing. It's moving that fast, it's hard to keep up. And I suppose it's like any technology, so when you're at that start, it's hard to imagine where it's going to go. And when you're in it, you don't really realize you're on that sort of wave of exponential change. You know, I think Luke Boyle said we have more in common with someone who lived 200 years ago than someone that's going to be living in 20 years in the future. So that's the sort of gradual example of exponential change. So AI and Bitcoin, it's hard to know really what sort of path AI is going to go on to. But if you listen to someone like Jeff Booth, he said, you know, it's just a natural. It's a natural thing that we're always going to be exploring these things to make our lives better. That's what we do. That's why we, you know, innovate. That's why we explore technology, is to save our time, make our lives more efficient, so we can get more for less. And AI is just a natural progression of that increase in technology, that improve in technology, but in terms of its effect on Bitcoin or anything else, I couldn't tell you. I'm not deep enough down the AI rabbit hole to be able to answer that yet, but it's certainly going to be interesting. It's certainly going to be interesting to keep an eye on that there. And I think, yeah, when we look back, we could see the intersection of AI, Bitcoin, internet sort of weaving its way and being just 3 layers of just real important technology that we're going to be using in the future. Without, like, we don't even think about the internet. You know, it's just part of life now. We just use it. We don't think about electricity. We just use it. You know, it's not something we actually constantly think of. It's just a part of everyday life. But you know, so when you have that, when that technology does penetrate the masses, and you do, it goes down a cycle of a generation or two. You know, it's probably going to be likely that in 20, 30 years we're all just going to be using Bitcoin, not really thinking too much about it. It's just going to be another day, another part of life, similar to the internet, similar to electricity. It's just going to be how we transact. And so AI could be similar. It could be just, you know, it could be just a natural thing where in 20, 30 years, just, yeah, your AI bot just contacted you, and I don't know, I don't know what way it's going to go, but yeah, it's probably, now that it's sort of the genie's out of the bottle, it's probably going to be around, it's probably going to be here to stay, so something to keep an eye on.
Okay, just one more question there.
I want to give the lads time to get a quick loo break. We're meant to be finished 5 minutes ago.
One more, yeah.
Fast answer. 2 sentences.
The quick one. We all know it's only 21 million people in circulation, or 19 million in circulation. So how do you prevent one of them, or let's say one entity decides to buy all of Bitcoin or another Bitcoin? Yeah. So how do you prevent that?
Oh, you can't prevent it. You can't prevent anyone. If Google decide they want to buy as much Bitcoin as their balance sheet allows, there's no stopping that, but there's no problem with it either. Because what do they have to do? They have to spend it at some stage.
Yeah, and then that will create more volatility.
Yeah, well, anybody who believes that the volatility is sort of going to go down, it's going to become nice and stable, you can just immediately discard that. That's not going to happen. Volatility in Bitcoin, in fact, volatility with any new money as it's going through its adoption will only increase as the thing that you're measuring in will decrease. You know, the paper market in Weimar Germany only got more volatile towards its demise because, you know, if you look at the chart, it's volatile, but then it gets extremely volatile before it dies, and that's what's going to happen probably with fiat currency. Is it will probably just get more volatile as Bitcoin sort of as the adoption of Bitcoin goes up. Volatility is probably likely going to actually increase towards the end. So whether if someone buys, you know, 10 million of the supply, that's not really going to change anything. It just means they're going to have to spend it to distribute it eventually. So Michael Saylor's buying 100,000 every couple of years at this rate. So yeah, it gets stacking. It's all going to go. Is that us?
Yeah, I think that's about it then, yeah. Thanks for that. And just one thing to mention about the volatility. At the moment, okay, the price of Bitcoin is set at about 2.2 million Bitcoins that are on the exchanges. So all the exchanges in the world, okay, there's only about 2.2 million Bitcoin on that. Okay, 70% of all Bitcoins at the moment haven't moved off the cold wallet in a year, and 58% haven't moved off for 2 years. Okay, in the next 18 to 24 months, there's going to be regulation coming in for Bitcoin and cryptocurrencies, and then the pension funds are going to move in, the institutions, the sovereign wealth funds, and they're going to come in with trillions of dollars. So whoever's buying it now is early before the pension funds. That's the whole thing. We're all still early. We need to all get in before they get in, and they start buying hundreds of millions, billions in one go. What? That's what? That is this. Decent. Well, they can't regulate it. They can't regulate it. They can't regulate Bitcoin. They've already said there's going to be 2 baskets. You know what I mean? We talked about it.
We're going to have a little break. Guys, give Colin a good round of applause. Right, you've got 8 minutes now.
Hi, Dinny. How are you, buddy?
Good, man. We are told as we back for just getting a quick loo break, so they're going to be back here in
Okay.
6 minutes and we're going to be good to go. So I'm just going to turn off your screen just for them, or you can turn it off if you want. Say hello, Lawrence.
Hey, buddy, I saw your picture. I saw your picture in the circular. I said, how awesome. It's great to see you guys again. That's so cool.
Yeah. Have a good one, yeah? Have a good one.
Yeah, brother. All right. Thanks a lot. I love the sound of the kids.
Yeah. We've had some awesome presentations, so Dave's going really well, man.
Awesome, buddy. It looks like a good crowd. I saw some pictures. Or you sent me some pictures. Yeah, it looks really good.
Yeah. How are you getting on in Miami? How's the head? Were you out last night?
I'll let everyone know when I when I go live. Okay.
Perfect.
I was actually on Sailor's yacht last night.
Oh wow.
Yeah.
I'd say that's something. Okay, I'm just going to go and start funneling the lads back in. I'll be with you in a couple of minutes, Greg. Thanks very much.
The man wanted to come up.
Okay guys, we are close to lunch, but we have a very special guest zooming in from Bitcoin Miami, so I'm just going to pull Greg up and then we'll give him a nice Irish welcome. Okay. Who's that guy? Who is that guy? Let's have a cheer. This is Ireland, come on! Come on, it's Greg Foss! Greg, you're pretty popular here.
Man, oh man, I'm so honored to be here, guys. Thank you so much, Dinny. It's your pleasure.
How'd you get on last night?
Yeah, you know what? Last night was crazy fun. I was lucky enough to get invited onto Michael Saylor's yacht just outside of Miami. He had a speaker dinner. And the highlight of my night was meeting, well, two highlights actually. One was meeting Robert F. Kennedy Jr., the presidential candidate of the United States. And truly the best meeting though was Jack Mallers. I know you all know who Jack is, but for me, meeting a young man who's truly going to change the world. And I'll tell you a secret, he actually knew who I was. I was so flattered that Jack Mallers actually said, "Boss man, I know who you are." So for a 60-year-old white fat kid like me, I'm just totally blessed to meet all these people in the Bitcoin community. I want to applaud everybody in your group, Dinny, for coming out and learning about Bitcoin, because we're going to change the world, people, and we have to change the world because the world is on the road to the wrong place, and I want to put the world back on the road to the right place, and Bitcoin's a big part of that. So thanks for having me.
That's awesome, Greg. I suppose I'll get stuck in because I want to pick your brain and get through a few questions, and then we're going to open up to the audience and get some questions from the guys. I suppose, what's happening on your side of the pond with banks, and is that something that we've got to be concerned about with our Irish deposits in our bank accounts?
I don't want to cause any undue alarm because, as you guys know, in Ireland, you lived through the financial crisis in 2008, 2009 with some pretty severe, eye-opening events in Ireland. But the reality is, yes, everybody needs to be concerned because banking is banking. There's no inherent difference between banking in the United States nor banking in Europe. All of the metrics align because banks are very levered to their risk-absorbing equity capital. And so that business model is ubiquitous. It doesn't matter what country you're in, essentially you're exposed to the same risks. And therefore you have to be very aware that banking can can be turned on its head, and confidence is key. And when you lose confidence in any system, it tends to build on itself and contagion spreads. But banking is particularly susceptible, first because it's visual. You see the results really quickly. The vision of people lining up to draw their deposits spreads like wildfire, particularly with social media platforms right now. So I'm not trying to raise awareness any higher than it should be, because banking has always been risky. And you just have to be very aware of that risk and act properly.
Awesome. You talk a lot about the debt spiral, and that sounds like, there's an approaching problem. You don't seem to see there has been an out of it. Maybe could you just explain that to us?
Yes, certainly. So many of you, I hope, have studied the Bitcoin thesis from the Bitcoin community, based on the fact that I don't leave all Bitcoiners, well, I'll say I'm certain that not all Bitcoiners want fiat currencies to fail, okay? The reality is, though, that all fiats will fail over time. All you need to do is look at history. All fiats always fail. And in that vein, they fail because of a debt obligation which expands beyond the ability of the economy to support that debt obligation. And that, unfortunately, is where we currently are on a global basis now. And I like to break it down as simply as this. I'm not looking at any country in particular. I'm taking all global debt, which is over 400 trillion US dollars, is the total amount of global debt measured in US dollars. Of that, you know that the US obligation is around $31 trillion. That's the USA's portion of the 400 trillion of global debt. And we'll get into that in a minute. But of the $400 trillion of global debt, it relies on a global economy that's only about $100 trillion. Okay, so you see here that you have a global debt that's 4 times as large as global GDP, which means it's 4 times as large as the tax base, right? The reason that you look at total debt to GDP is you're essentially looking at the debt burden relative to the size of the tax base. And the problem with the global debt is there is a coupon on that debt, right? That's what debt is. It's a fiat contract with an interest coupon that has to be paid annually, or else there is a debt default. So to make things pretty simple, let's assume that the average coupon on all of the global debt is 3% annually. Now that's very low. It's a low assumption because even the US Treasury pays about 3.5% right now to borrow for 10 years. But we'll put a 3% coupon on that global debt. Now that debt includes all government debt, all corporate debt, all consumer debt. So you can see that that coupon assumption is very low, but even with that low of a coupon, the math, does not work. And why is that? Well, let's walk through the equation. If your denominator, which is global debt, is growing at 3% annually, but it's 4 times as large as the numerator, I'll ask you a very simple question. Do you think it's logical to assume that the denominator, which is GDP, will keep up with the growth of the numerator? When the numerator is 4 times as large, it's growing at 4 times 3%, that's 12%. Do the people in the room think that it's likely that the global economy will grow at 12% annually just to keep up with the organic growth of the debt. And I'm not even going to ask for a show of hands because I know the answer is going to be, it is almost impossible. And in fact, I'm going to tell you it is impossible to keep up with the organic growth because what are politicians doing as well? They're adding on more debt into the numerator with things like government deficits. So people, that is the debt spiral in a nutshell. It's growing organically faster than the ability of the tax base to keep up with it. And then more importantly, it's also growing because of the irresponsible behavior of politicians. So what is the only solution in this debt spiral? Is to print more fiat. You see, that's how all fiats always go to die. So I'm not going to pick out what fiat will be the next fiat to fail. I will say that I think it's most likely that the US dollar will be the last fiat to fail, closely held in check by perhaps the euro, but you guys know that I'm Canadian, right? And Canada is a G7 country. I hate to say it, but Canada is most likely the G7 nation whose fiat currency will fail first. And as a Canadian, I don't want that to happen, but it is likely to happen. And you have to protect yourself against that likelihood. So what is the best way to protect yourself against the certainty of fiat debasement? It is to own hard assets. And hard assets include gold, real estate, certain equities, but the best hard asset in the world ever created by mankind is Bitcoin. Full stop. Bitcoin is the best hard asset, and everybody in this room needs to own a little Bitcoin. I'll just stop very shortly, but I also want to provide you a warning with you have to be very diligent monitoring your soft assets. And what are the worst soft assets in the world right now? Bonds. Bonds are a soft asset because all that are is a fiat contract that is programmed to debase, right? Think of lending $100 to the US Treasury at time zero. You lend it for 10 years. It's highly likely, not certain, but highly likely you will get your $100 back in 10 years and you will have earned a nominal coupon on that treasury loan that you've made. Today you'll get 3.5% when inflation rate is actually running much hotter, but stick with me. You get 3.5% for 10 years annually. You'll most likely get your $100 back in 10 years. But what is the purchasing power of that $100 in 10 years? It's substantially reduced from the purchasing power at time zero. So that is not a good investment. That is the fiat contract debasing in real time, right in front of your eyes. And for the benefit of your children, you need to own hard assets. Now, a lot of you will say, I own real estate. And I'm not going to tell you that real estate is not a better investment than bonds. 100% real estate is a better investment than bonds, but real estate itself has some, some qualities that aren't as attractive as Bitcoin. For example, the liquidity of real estate. When you want to sell, it's not like you can push a button and capture the value in your house or in your real estate investment. It's not portable. You can't take real estate across borders if you decided to leave. It's not transferable like Bitcoin is. And most important, there's no scarcity. Okay? More real estate can be developed all the time. And you can say, well, we'll run out of land on the earth. Don't overthink things, okay? Right now, we're not even close to that. So real estate is a good investment, Bitcoin is just so much better that I don't want you guys to say, well, I'm all protected because I have my net worth in gold and real estate. You need to own some Bitcoin, people. Not all of your portfolio, but you need to own more than zero. And that's because, and I'll try and wrap this up nicely, it starts with the debt spiral, and then fiat debasement, and then the ability to protect yourself because of portability, immutability, verifiability, transferability, and scarcity. Bitcoin. I've never seen a more simple investment in my whole life. You have to own some. Thanks, Dinny.
That's awesome. I want to just talk to you a little bit about the debt spiral. And I don't want to wind you up by mentioning Charlie Munger or Warren Buffett, but I have already, so you'll probably go off on one. But bear with me for a second. The likes of the Paul Tudor Jones, the Ray Dalios, why can't they see this debt spiral coming the same way that a lot of us in the Bitcoin space, the thought leaders in the Bitcoin space, and aren't coming to the conclusion? Have you a thesis on that?
Well, certainly, okay, let's be, for sure, Ray Dalio sees it. He's written a whole book on it. Now, the crazy thing about Ray Dalio is he understands the quality of Bitcoin on one side, and it describes what he wants to see the solution to be, which is Bitcoin. I mean, like, Ray, wake the fuck up, okay? You just decide, you just described the solution and it's already existing. It's called Bitcoin. But here's the thing about Mr. Dalio is, and I actually admire that. He was a very smart individual who designed this strategy called risk parity, which balanced equity and bonds. And it worked because interest rates started at 18% and went all the way down to zero. And bonds rally when interest rates go down. So it was a very brilliant strategy, but it's over, okay? That strategy is baked, it's over, it's done. And Ray Dalio knows he needs to get into Bitcoin. The problem is the market's not big enough for Ray Dalio's Bridgewater to get into Bitcoin, because if he bought as much Bitcoin as he had to buy, the price of Bitcoin would be probably over 150,000 US dollars right now, just because Bridgewater had to buy an allocation big enough to impact their portfolio. By the way, that day is coming, Ray, okay? That day's coming. You're not gonna miss it. Whether it's Bridgewater or other hedge funds that are buying Bitcoin, that day is coming. And then at 150,000, it's gonna go to 250,000 and higher because of the mathematics of the debt spiral. So, Dalio sees it. Paul Tudor Jones already owns Bitcoin, but he's more of a trader. The key is listening to guys like Stanley Druckenmiller, who basically describes the debt spiral very eloquently, even on CNBC, the financial news channel in New York. He's described it, and people are just too dumb to listen. It's right there in front of them, and they choose not to listen because they don't want to know the reality. Because it's scary. The reality of a debasing fiat at an accelerating basis is very scary, especially for people on Wall Street, because it means their business goes kaboom. So I think they know it, Vinny. I just know that they don't want to admit the truth. And I think that's the simple reality.
Thanks, Greg. Do you think, and this stuff is obviously just as applicable to us here in Europe, this debt spiral, is the rollout of a digital euro or digital dollar, does this help push the system out for another few decades? This doesn't save the debt spiral?
No. I mean, all a CBDC is digital with surveillance, okay? So with restrictions. Hey, Dinny, I saw that you were at a restaurant that was very near a parade route for a pro, an anti-government rally. So you spent money at that restaurant, so we're gonna, we believe you were at that anti-government rally. So guess what, Dinny? We're restricting your ability to spend this CBDC. You know, CBDCs are very, very dangerous. And I think that people will wake up to the fact that they need an alternative, a non-surveilled digital asset, which obviously is Bitcoin. But stick with me here too. It could also help the adoption of Bitcoin because of the digital currency on your wallet already, the ability to see a central bank digital currency side by side with a Bitcoin digital asset. That sort of simplifies the world for older generation people like myself. But coming back to your question, makes no difference, does not change the mathematics of the death spiral one iota, okay? Math is math. It doesn't matter if math is analog or math is digital. You cannot change the math, okay? It's that simple.
Thanks, Greg. And then I suppose if we're trying to save the existing system, would a fear to you be that, you know, nation states become hostile towards Bitcoin? Do you fear a Bitcoin ban? Do you think it's too late for that, or do you think it's too early for that, or do you think that's just, we're not going to go there?
Well, it's always a risk, and every jurisdiction will try and regulate it or try and restrict it in their own way. Or some jurisdictions will try to embrace it, like El Salvador. I personally believe that any nation that tries to restrict Bitcoin will actually flame the fire, and it's like telling your kid, hey, don't drink alcohol. Don't drink alcohol. Well, what's the first thing that the kids will try? Hey, get me a Guinness. I want to try it. I want to try this lovely thing that they're telling me not to drink. You know, it's the same thing with Bitcoin. And I'm not saying there's anything illegal about Bitcoin. It's just that people tend to read through a government attempt to restrict anything as, hey, maybe they don't want me to try it because it's either fun or, you know, by the way, I'm not promoting drinking, but I do love Guinness, so let's be clear about that. But at the end of the day, when it comes to money, people would say, well, if the government's trying to restrict me, maybe it's because they're scared or they're trying to hide something. So you're going to see it, different countries employ different strategies, Dinny, but my belief is, and last night I happened to meet Robert F. Kennedy, the presidential candidate, I think I told you that. You should have heard his speech on Bitcoin and why America needs to embrace Bitcoin and why there's some, you know, there are evil organizations within any government, but, you know, look, I'm an optimist. I like to think that sane minds and freedom will prevail. It's not certain, but I'm very confident there will be some countries who exhibit the behavior that we hope, and you don't have to look any farther than El Salvador right now. Now you'll say, well, that's a small nation, 6 million people, but the word spreads, and all you have to do, and look at you guys, I mean, I'm so impressed. A country like Ireland, if you want to, I guess it's Sunday morning, or no, sorry, I guess it's still Saturday over there. On a Saturday, you guys are taking time out of your day to come and learn about Bitcoin, and this is why it's going to succeed. And I think that people tend to fear the unknown more than they should embrace it. For me, I actually think Bitcoin is unstoppable no matter what. All paths lead to Bitcoin. There will be bumps along the road. Sometimes we think that bump be a bad thing, and it could turn out to be a very good thing for the Bitcoin adoption. So I don't like CBDCs, but there will be countries that try and implement a CBDC, and you're already seeing that in Nigeria, and the response of the people adopting Bitcoin in Nigeria because of the attempts of CBDCs in Nigeria. Now, Nigeria, if I'm not mistaken, is a country of bigger than 200 million people. All right, you got El Salvador, you got Nigeria. You know, United States is only 300 and something odd people. It is the biggest country in the world, but there's enough states in the United States, like Florida, like Texas, that don't have to listen to the centralized control of Washington, and they can make their own mind up. So I think there's a lot of, you know, the playbook hasn't been written yet, but I think you can look at what's going on right now, Danny. You can draw some conclusions as how, you know, it'll be an uneven implementation, and there'll be places that do it and benefit by not implementing CBDCs, and then those that try will see the reality like Nigeria has seen.
Okay, what's the allocation, if you're giving someone generic advice, of where's the allocation, and how do you calculate that? Is it your liquid net worth, you don't include your property if there's still debt on it, or how do you define that, and where would you put someone on percentage exposure to Bitcoin?
Yeah, great question. So I'll start with where I am, and you can either decide whether I'm smart or silly, and I don't care because I manage my own risk, and that's what everybody's going to have to decide. Everybody will have a different level, okay? I'm at about 40% of my net worth, and I include everything there. I include my real estate, I include my equities, I include all of my assets that go into a net worth calculation. So that means I also include any debt as a component of my net worth calculation. But I'm at 40%, but I'll tell you, I didn't start at 40% because I was lucky to get involved with Bitcoin 8 years ago. But my best advice is this. Firstly, everybody will be different, because I would never want you to own so much that you can't sleep at night, that you can't stomach the potential volatility of Bitcoin. I view the volatility actually as being an asset or a positive character trait of Bitcoin, but a lot of people can't handle that volatility. So first and foremost, don't own more than allows you to rest comfortably. I like to tell people to start with 5% of their portfolio. Why 5%? Well, it's a good number. That means you still have 95% in other assets that I would view as being worse than Bitcoin. All right? So 5%. Buy your 5%, not all at once. Dollar cost average, have a structured, disciplined purchase plan. And once you get to 5%, try not to look at it. Try to concentrate on the 95% of your portfolio where your true risk lies. If I can convince you, though, to get to 5%, I have a price target on Bitcoin which is at least 100 times higher than where it currently trades. Can you imagine what that 5% goes to? And does that mean that you don't sell any and your 5% becomes 500% or 5 times the size of your current portfolio? You'll have to do some risk management along the way there too. So I want to leave you with one thing. The only wrong allocation to Bitcoin is what? That's right, the only wrong allocation is 0. If you own 0 Bitcoin, you're actually taking more risk than if you have a proper portfolio allocation. And you'll say, Foss, what is that proper portfolio allocation? And I can only say, I know what it is for me, and I can sleep at night, and it's not 100% for me. But there are some people who that are comfortable with 100%. And who could those people be? Well, let's say you're 25 years old, and you've scraped and worked hard, and you don't have school debt, and you're between let's say 25 to 30, and you've managed to accumulate a net worth of somewhere around $25,000 US. I would tell you, putting all of your money into Bitcoin at that age, when you have no kids, most likely you don't own a house, put all of your 25,000, into Bitcoin when you're young would not be unwise. I wouldn't pound the table, but I would tell you that's the kind of allocation at 100% that I think would be smart, because you have such a long runway, you don't have any family obligations or any material obligations that would be irresponsible. You can live with the volatility, but most important, your time frame is so long. When you're 25 to 30 years old, you have 40 to 60 years to see how this plays out. And that type of life-changing experience you only get when you're 25 years old. I'm 60, you people. I own Bitcoin for my kids. I don't own it for me. I will never sell it, ever. Well, I guess I should say I will never sell it down to 0. I will never sell it down to 0% allocation. I own it for my children because it's the best insurance policy on the fiat Ponzi that I have ever seen. If that information changes, I will adjust my allocation accordingly. But everything that I've done, all the analysis, the hundreds and thousands of hours that I've researched in Bitcoin, my conviction gets stronger, not weaker. And with every silly move by governments to add debt to their balance sheet, to print this debt ceiling theatrics that are going on in the United States, it's a bunch of clown world shit, okay? You gotta see it, what's going on, and then you gotta see what your insurance policy is. And your insurance policy, very simply, the best insurance policy, the best asymmetric upside trade that I've ever seen in my life. It's called Bitcoin. And one final thing, Dinny. In your lifetime, people, you will get the chance to invest in that type of asymmetric opportunity perhaps 5 times. In your entire life, you will have 5 opportunities. The first 2, you're gonna miss, okay? Because you're gonna be too smart, you're overthinking, you don't understand, you're not a good risk manager, and you miss those 2 opportunities. The third one, you're gonna get into, because you're smart enough to get into, but you're gonna sell, okay? You buy something at $1, it goes to $2, and you're gonna say, doubled my money, I know this was good. And you sell it $2, and it goes from $2 to $100. Sort of like Apple stock, okay? Or Amazon. Then the 4th and 5th opportunity, I really pray that you act and you understand that you really have to take these chances, because in my entire life, I've only had 5 chances. And I spend my day scouring the world for these types of investments. So take this opportunity. I have the experience of knowing that they don't come around very often, and in fact, Bitcoin is better than any of the other ones I've ever seen. So again, I just have to tell you, this is not something that you can say, well, if I miss this one, I'm going to get the next one that comes along. No, I don't think it's like that, people. I really think that this is the chance, because this is better than I've ever seen, and it's 1 of 5, and it's way better than the other 4. So that's my best advice. I hope that helps.
That's fantastic. Greg, before we let you go, and really appreciate your time, I just want to take 1 or 2 audience questions, if that's okay.
Yeah.
How's it going, Greg? Really appreciate all the work you're doing, getting the word out. Very, very solid. Obviously, you've been trading bonds for over 30 years, and you've learned a lot about nation states, corporations, how they issue bonds. Once fiat currencies die, as you say, we're still going to need liquidity across the world to build on top of what we have. What does the bond space look like once fiat currencies die, and how do you trust someone to pay back bonds, and what do the coupons look like? Are they decreasing coupons? And who's going to do the rating? How would you trust an institution to rate other parties when paying back Bitcoin? What's your take on that?
Wow, what a great question. So I cannot see the future as clearly as other people pretend they can see the future. But I need you to understand. So great question. Thank you for such a thoughtful question. This will be a process, okay? It's not like a light switch will go on and off when all fiats fail overnight, okay? I mentioned that the USA will probably be the last fiat to fail, which also means that we have at least 10 years, if not more, in my opinion, easily for the United States. So what will happen is you'll have the failures of currencies in secondary and tertiary nations, unfortunately, I'm going to say this, like Argentina, okay? Argentina is a G20 country, which means it's one of the top 20 economies in the world, and their fiat is failing. But below Argentina, guys, there's another 150 countries with fiat that will fail absolutely before the United States fails. So it'll be a process where bond markets will exist for the biggest, most important borrowers, fiat bond markets, okay? But the transformation is going to be where Bitcoin is the pristine collateral in the world. And that pristine collateral can be used to borrow either in fiat or in some other contract that is priced as Bitcoin being the collateral as well as the unit of account. So people always say to me, well, Foss, Bitcoin trades against fiat. That's a little bit mistaken because the trading pair of Bitcoin versus the US dollar is no different than oil versus the US dollar. But here's the kicker. What if we remove the US dollar and it's Bitcoin trading against oil? We don't have to mention fiat in there at all. Bitcoin trading against oil. Vlad Putin pricing oil in Bitcoin. Why? I don't know if I'm him. I'm not a huge supporter of him at all. But the fact that his oil is priced in US dollars and the USA can freeze his account anytime, don't you think that Mr. Putin has an incentive to price his oil in something other than US dollar fiat? So he's moving to other fiats. My advice to Mr. Putin is, dude, price it in Bitcoin. It's going there. So use Bitcoin as the unit of account against oil. See, I didn't mention fiat at all. This will be a process, and you're very smart. Question on how do bond markets look in fiat when Bitcoin is around? I don't know, and quite honestly, I don't care. Bond markets are soft money. I don't care about soft money, fiat bond markets. But if you're talking about a bond market that uses collateral in Bitcoin and has a coupon that's paid in oil, boom! Oh my freaking Lord. How does that change your paradigm? So don't get stuck in the fiat mindset. Fiat is a Ponzi, and fiat is the wrong unit of account. So don't worry about fiat, okay? How about we worry about oil and Bitcoin? Or we worry about gold and Bitcoin. We never have to mention fiat. Use Bitcoin as your unit of account. Now, I know you're saying, well, you can't just turn the light switch. It'll be a process, okay? You'll get these financial people on Wall Street that will design this. Why? Because they're good at designing things that allow the economy to continue to function. Will there be a lending function with Bitcoin? Absolutely. But will it involve fiat? I don't think so. But it may. And if it does, I promise you, it will be on its way out. Because the eventual unit of account in the world, in my opinion, will be Bitcoin. And that will be driven because Bitcoin and energy, etc., the most important commodity that we trade, energy, should be priced in Bitcoin. Bond markets, those things will develop, but they won't be fiat-based for the long term. And the short term, I'm not sure how it'll play out. I promise you Wall Street will figure out a way to extract fees from it and make money, and that's a good thing. I really want you guys to think bigger picture, how you remove a fiat unit of account and I'm an engineer, so I love digital energy and natural resource energy, but you can take it wherever you want, okay? I know it's a bit of because I don't have a crystal ball to see how that component, the bond market component in a Bitcoin world, a fiat bond market component will actually be incorporated. But I hope I didn't dodge the question too much. I hope I just opened a paradigm as to the different things that could happen. Thanks.
That's also great. We're just going to take one final question from you.
Hi, as we're talking about worries, what sort of impact could have a paper Bitcoin versus the real one? You know, the financial guys will find out some sort of options, derivatives, God knows what else, versus the real one. Look what happened with gold. How many gold, paper gold is versus the real gold, you know? That's what is worrying me a little bit. Thank you.
So what a great question, man. You guys have done some good homework, Diddy. You trained them well here. Okay, look. Let's first of all look at so the question is, am I worried about the paper market in Bitcoin? Yes. But the difference between the paper market in Bitcoin and the paper market in gold starts with the underlying asset, okay? First of all, gold. It has a 2% annual supply, plus or minus, but as the price changes, that annual supply can increase, right? Because there's more incentive for a miner to take the gold out of the ground when the price rises. Bitcoin is the total opposite. Bitcoin price does not have any impact on the supply schedule of Bitcoin. So we know the supply schedule of Bitcoin, which will always be limited to 21 million Bitcoin. That is the key to this whole equation. You can put paper contracts on top of that asset, but the fact that there only is 21 million Bitcoin is the difference between an uncertain supply schedule of gold versus the gold market. Here's another kicker. How much gold actually exists in Fort Knox? Well, we don't know. There is no immutable ledger that tells you how much gold is in Fort Knox. And of the gold that's in security around the world, how much of it is actually fake gold, like the tungsten? I know it's not zero. I don't know if it's more or less than X% of the assumed supply of gold in storage is false, but there is no verifiability in gold, whereas in Bitcoin, you can verify where the Bitcoin supply is. So the derivatives market in Bitcoin will exist. The futures curve we could get really technical, I don't want to take it too far, but the fact that the futures curve in Bitcoin is normally in what we call contango rather than normal backwardation, which is the gold curve, all of these things lead to a much different environment for paper Bitcoin. However, if you want to be certain, you need to own Bitcoin and self-custody your own Bitcoin. And all we know, people, is that in self-custody, there will only ever be 21 million of the base asset, Bitcoin. And you can develop a derivatives market on top of that however you want. But as long as you hold the base asset, the reference asset in self-custody, that is the ultimate math test right there. 21 million equals 21 million. And you could have a contract based on top of that you call a derivative, and you have counterparty risk and all that. Well, some people will play that game, but all I care about is the base layer. Thanks.
Greg, that's awesome. I want to thank you for taking your time out. It's early morning there. I know you were partying with Sailor and the boys last night. Going to give you a little time.
It was good. I just want to tell you, this was my pleasure to be with you guys, okay? I would wake up at any time of day to be to visit you guys in Ireland. So don't worry about my night with Sailor. That was perfect.
All right, well, guys, can I ask you to give a good round of applause and let's give a clap. Thanks, Greg.
All right.
Thank you, boys. Thank you, everyone.
Guys, that was awesome. We got lunch now, so you can get out there, get a bit of lunch, and we'll see us back for 2 p.m. we kick off. Good work, guys. Thanks, everyone.
Did you get all that?
Dinny. Dinny. Dinny.